What up, everyone? Welcome back to Financial Education and Business. Looks like the market is actually recovering, which is really good to see. And I don't know exactly why. Maybe the market is getting ready for tomorrow. Nvidia's earning, but maybe they're afraid, or maybe there is just it's been oversold, and this is just time for it to recover. So we're gonna watch some videos here, Yahoo and some of these news channels, and then go from there. I hope you're enjoying the show. If you do, make sure you subscribe.
To talk through some of these significantly tightened export controls that we're seeing out of China as they relate to rare earths. But Jonathan, before we get into that, would you mind just telling our viewers a little bit about Niron Magnetics and what it is that your company does?
Yeah, happy to. Thanks for having me on the show today. I'm CEO here at Niron, and we've developed the world's most powerful magnet technology completely free of rare earths and critical minerals. And so we're excited to be commercializing and scaling that in Minnesota. And about 6 weeks ago, we broke ground on our first manufacturing plant that will come online in early to mid 2027.
Okay, could you sort of give us, Jonathan, a bit of an update on what you're hearing as far as progress between the US and China on where they're up to with the export controls? Because it seemed like the Trump-Xi summit had yielded some good results, at least hitting the pause button on some of those restrictions. But even with that, it seems like we haven't exactly seen the flow of everything as some people may have liked to since then.
Yeah, happy to. So in April 4th, there were controls that were put in place, and then there was some proposed increased controls in early October. And those were closing some of the loopholes around getting licenses or obtaining licenses for rare earth exports out of China. What we've seen with the Trump-Xi discussions is there's a proposal to delay the October 9th announcements and controls by about 12 months. But we've not really seen any details around that. In the meantime, companies, and I talk to customers quite often, they are still required to obtain licenses. And so that process takes quite a while. Takes up to 45 days to apply for a license, and they only last for about 6 months. And so that's causing a lot of supply chain challenges with the supply of magnets into many different applications and customers. And so we'll see here what happens over the coming weeks. But I think what's clear is that the licensing system that's being put in place is probably not going to go away. It's going to be here to stay.
And Jonathan, how has China's latest move changed the conversation around alternative opportunities and alternative materials like Niron's rare earth-free magnets?
Yeah, we've seen a step change back in April and another step change again in interest from both customers and investors. We developed our technology over the last decade. The genesis of Niron was a Department of Energy research grant here at the University of Minnesota, and that was the genesis of Niron. Over that time, we've really developed and perfected the science around our iron nitride technology, and we're now in the right time, the right place to scale that technology and bring that to market and do our part here to solve the magnet crisis that we're in the US and the West.
Yeah, I mean, obviously, it's great to see something like this as to what you're doing. I'm just wondering, broadly speaking, when we look across the US and the industry as a whole, what are you seeing as far as progress on, just the wake-up call that the US has had to try to look at this more sort of strategically, to try to secure their own supply chains to really take on the hegemony that we've seen by China over the decades? Where do you see the US up to right now with all this talk of equity stakes, et cetera, as to sort of how far along the US is and how much work there needs to still be done here?
Yeah, we're going to need all the solutions, right? So we've seen the government taking equity stakes and investing in rare earth companies and critical mineral supply chain companies here in the US. And we're going to see that continue. We need all of the above solutions. The amount of magnets in the world needs to triple in the next 10 years. There was only ever enough rare earths being actively mined for it to double. And so this was always going to be a supply-demand imbalance. And so at Niron, we offer, the solution here where we don't just reduce our reliance on China, we eliminate it. We use iron and nitrogen as our raw material feedstocks, and we completely domestically source those. And so we can eliminate the reliance on China. And so we're going to need all of these solutions to solve the crisis that we're in right now. We need a reliable, stable supply of magnets because the world really runs on magnets across many different devices that really make the modern world a better place to live in. And so as we look forward to future growth here with AI and data centers, they need more cooling, they need more motors to power the fans and pumps that cool data centers, but robots, humanoid robots, and even drones, those all are very much emerging growth markets for magnets, which is going to propel their growth over the next decade and beyond.
And Jonathan, with this iron nitride magnet, how mature is the technology itself? Are we already seeing it in goods, or how long until we start to see them in some of those things that you just mentioned, or in EVs and wind turbines and consumer electronics?
Yeah, so you'll see first products in market next year in audio and small and medium-sized industrial motors. And then when our plant comes online and really starts to ramp in 2027, then you'll see then as in more applications in automotive and also in wind turbine applications and even defense applications. And so we're in many qualifications right now, but first products in market next year, and we're excited to bring our technology to market. We've had third-party validation not only from our customers, but also for some of the national labs to validate some of the performance, and it's very encouraging. And even today, we can replace more than half of the neodymium iron boron rare earth magnet applications that we're working on.
Jonathan, it's been an absolute pleasure speaking with you today and getting a bit of an update on your business and looking across the rare earths today. Thank you so much for joining us. I really appreciate it. Jonathan Rountree, CEO of Niron Magnetics, joining us there. Coming up next, it's time for Options Corner, and Alex Coffey will join us to look at Target ahead of tomorrow morning's earnings. That's coming up next on Market on Close.
Pretty exciting day. Definitely the market is turning around. Big numbers coming out today, but nothing as important as tomorrow. Looking forward to NVIDIA reporting their number. Everybody's holding their breath for tomorrow after market close. But today, obviously, Home Depot reported their numbers. Let's go to earnings. Despite the earnings being okay, not bad at all, they missed on EPS, but compared to other moments, they've missed EPS, but overall the market loved them. It looks like they missed on EPS, and the market dragged them down about 5% today, almost going on to 6%. Kind of showing consumer sentiment, consumer weakness, which is not a good thing, especially when we're in an era of, where a lot of people were talking about recession and everything else, and people are saying they can't afford, everyday goods, and especially when a lot of people can't afford homes, they're not gonna buy a new house and buy the home products they need. And yeah, there's Target is gonna be reporting tomorrow. Lowe's, TJ Maxx. Lowe's is probably also getting dragged down along with it, down almost 2% as you can see, and they even haven't reported earnings. But overall, the company has missed top line before on revenues. But when it comes to EPS, since you can see Q2 of 2021, they've consistently beat EPS, which is a good thing. But tomorrow's number, I think the one everybody's looking forward to is this NVIDIA numbers, and there's some great expectations. So let's listen to what's going on in Yahoo Finance, and we'll go from there.
Real wages have gone up. I think he said something like about $1,200 this year. His point being, even if inflation stays positive, if wages keep going up, people should feel better. And I'm curious to get the Joe Brusuelas take on that.
Well, I don't know about you guys out there, but the dollar's down anywhere between 7 and 10% this year. So I'm not buying the real purchase.
You're not buying what he's selling?
No, we might want to call him in, Ron. There's some creative accounting there. Look, if you want to talk affordability, it starts and ends with supply. We need a lot more supply, whether it's building of houses, more energy. And I just don't mean drill, baby, drill oil. We need a diversity of energy resources. We need to increase supply. You know how you increase supply? It's that great decision the Trump administration just made. They rolled back the tariffs on food imports. Hell, let's extend that to Canadian softwood lumber. You want to help the housing industry? Roll back the tariffs to zero on that. You'll see an increase in starts because the price will have changed. And we go down the line. You want to increase affordability, right? You increase supply, and that includes lower costs, whether that be you actually just create the conditions economically or regulatory-wise, or you roll back tariffs.
Joe, always great to see you, especially
Anytime,
on set.
Josh.
Thank you, my friend.
You got it.
Coming up, we take a look at some of the top trending tickers on Yahoo Finance.
An elegant touch for an everyday meal. Vanity Fair napkins. Elevate every day.
You applied to Grand Canyon University because you want somewhere fun and affordable, where hands-on classes can help you build skills employers need. Begin your story. Find your purpose at GCU.
Scammers demand payment with gift cards. Don't share codes or personal details. This is a hot flash. This is a not flash. This is a hot flash. This is not. If you have hot flashes and
you start thinking about the performance around earnings. Well, this stock's been down 4 quarters in a row post earnings. It's been down 5 of the last 6 times around earnings, but we are near the recent lows in trading. So if you were to look at the first chart that I brought, kind of painting the picture, a lot of this shouldn't be a surprise. Some of the trend information that I look at is like a 1-week EMA or 5-day versus the 1-month 21-day. And you have the 5-day below the 21-day. You have current price below both, usually indication of more of a negative trend. Well, that ties into the fundamental analysis. And then for those who have seen me on the network over the years, I like to use visual references that we're familiar with. So I have a support line, a resistance line, and kind of a middle ground line. And it's using the stoplight colors, so red, yellow, green, to give us an idea there visually of what you might be looking for. Buyers may step in near those lows for the year around 86. The sort of middle ground lines around 91, and then up to the upside around 96 gets us back into some of that more trading activity where this stock has tried to make a run at a couple times. Again, this is only over the last 3 months though, so the stock's been a little bit more sideways to range bound, at least post the disappointing earnings last quarter. RSI kind of middle of the road, not to be surprised by its typical going into earnings as momentum typically slows down.
Yeah, and like you said, you've been a bit more range bound, but still year to date down more than 34%. We are barely trading off the lows, only $3 higher than the lows right now in the last 52 weeks. As we look at how it stacks up against some of its competitors, we've had this conversation a lot. What does Home Depot's earnings mean for Lowe's tomorrow? What do some of the other
a sector-wide disappointing run, and the answer you get is not necessarily the case. The S&P over the last 3 months is up about 3%. The consumer discretionary sector of the S&P is down and really has turned lower over the last several trading sessions, really the last week and a half, 2 weeks, but it's down 1.5%. You look at Target then, which is represented by this kind of lime green line that we have there, 15% decline, and this is just over the last quarter. Yes, I know a lot of that is tied to the move the next day after earnings last time, but that was only a 6.2% decline. So it went lower after earnings, and it's continued that downwards trajectory ever since.
Yeah, still 9% on top of that. So, a significant move to the downside there. As far as the options activity that we're seeing in Target ahead of the earnings tomorrow, what are we seeing? Is it elevated in any way, or is just sort of generally soft performance not enough to move the needle here?
Yeah, definitely elevated in terms of volume. I know something that you and Rick talk about is the Sizzle Index, which is a 5-day average average volume versus today, and it's 2.3 today, so it does say that there's elevated volume. Interestingly enough, though, almost a one-to-one slight tilt to puts, so a little bit more maybe hedging or bearish feeling around this particular stock going into earnings. It's 54,000 and some change calls traded versus 60,000 puts, so around 115,000 in total options traded on the session. But if we look at this chart I have on the screen, this will set us sort of where the market's expectations are for movement, and it basically sets us up for just over a 9% implied move based off of this week's expiration. And if you were to use that number, around 8.25 for a dollar figure, with the 88.75 current price, targets around 97 to the upside and a 80.5. We can even round down to $80 to the downside for kind of a loose one standard deviation range. This is by no means a limit. It's just telling you where the option reasonably think that this is a range of outcomes that could happen. As far as this week's trading expiration, about 60% of those options, I talked about 115,000 of them, actually were traded in this week's expiration, which is again not uncommon, especially in 2025, where there's this favorable for the short-term options durations and expirations. But it's always fun how it kind of lines up with what the market expectations are. By far, the highest put strike that's trading is the 80 strike, although the highest put open interest coming into the day is still down at 70. The max pain line is at 90. So not unlike typical going into earnings, a relatively unhinged move is typically the most painful one to option holders. So 90 is the spot where the most options would expire worthless. Calls trading at 95, calls trading at 100. So there are still some bulls looking for a move around that expectation up towards 97 or so.
Yeah, that it's interesting you highlight that expected move of 9%. If we do move to the downside, that would be a new all-time low for Target. We would go into new low territory. Right now, their all-time low, 85.36. Alex, thanks for being with us for Options Corner today. That's Alex Coffey, our senior equities contributor here on Schwab Network. And I do want to send it back to Sam in New York to find out who we'll be talking about for Overlook stocks today.
Thanks, Marley. Well, George Tillis has his eye on Amos Sports. Heading into the close, he'll break down the news and what you need to know about that coming up next on Market on Close.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com.
Chief Investment and Portfolio Strategist for the Americas, Gargi Chaudhry, Wedbush Securities Managing Director Dan Ives, and EMJ Capital Founder and President Eric Jackson.
Just listening to that dialogue and then also thinking about how clients of ours are talking to us about AI. So for example, we just did this survey with People and Money, and 19 million Americans are actually thinking about investing in equity markets in the next year or so.
Who haven't yet,
or many of them have not yet. And a big driver of that is the AI sentiment, this mega trend that is shaping earnings. It's shaping, to your point, a huge amount of earnings growth over the last couple of years. And we think at BlackRock that this is something that is flowing through not just into flows, which is happening, but also into macro data. So it's the macro growth is impacted by earnings. Real GDP in the first half of the year, about 1.1% of that was driven by AI, but also in the micro in terms of earnings, in terms of IG issuance, in terms of how we're thinking about infrastructure and private credit. So this is definitely a powerful force and a tailwind in many ways.
Dan, we know that you are a big AI proponent, obviously, and as you talked about, you think we're sort of still relatively early on in the AI party, so to speak. I'm curious how you're thinking about the investing case for the enterprise versus the consumer when it comes to these AI applications going forward.
I mean, right now it's all about enterprise in terms of the AI revolution. I mean, that continues to be ultimately where the growth is. And I think consumer ultimately is going to come in 2026, 2027. But this is about the enterprise. In terms of this AI revolution, from NVIDIA to Microsoft to Palantir, this is an enterprise-led AI revolution first, then the consumer.
I think Dan's got to go back to his shot where he had the beautiful trees in the background in Miami. We're having a little bit of trouble with your shot, Dan. But Eric, I want to ask you about NVIDIA specifically. I know you've been an NVIDIA bull in the past. Obviously, NVIDIA has been incredibly dominant in this build-out phase of AI. Do you think that dominance is near peaking as we sort of move towards the application part of AI?
Well, they're gonna. You need both, and so they're in the driver's seat, and they will continue to be for many years to come. I mean, obviously they'll have the AMDs of the world nipping at their heels, and everybody will say, well, we're coming out with the next great chip. But NVIDIA has this 25-year head start over everybody, and so they're going to move just as fast, if not faster. And so we've got Rubin coming, and the next generation of chips after that, and there's nobody better positioned than they are to continue to lead. So they are a necessary component. The apps are also a necessary component of what's to come in the build-out. So both will succeed.
And, I know that you're focused on sort of stocks that are very specific where you see a lot of upside. But do you think that there's also a case to be made for investors? Do you just buy the whole basket of everything that touches AI, or do you think it is better to have sort of these very targeted bets?
Well, I think just as an observer, there's been a lot of skepticism around NVIDIA, for example. And so almost from the moment that the ChatGPT 3 came out, 3 years ago now, there was sort of this knee-jerk that, the way to play this is not NVIDIA, but it's to play the catch-up trades of like the next set of chips. And that's been terrible advice. And so I think a basket I would not suggest. For most investors, I would say you want to pick the winners within every little niche of the overall AI stack and go with those leaders.
So Dan, I want to go back to you on this then, because we know that you, again, are bullish on quite a number of these different names. Let's say, what if you had to pick one, right? What if you had to pick one stock in 2026 within AI? What's it going to be?
Tesla. Because, this is the AI chapter that's now going in for Tesla. Musk is wartime CEO. Autonomous and robotics is going to be the next step. I think Tesla is ultimately a double over the next 12 to 15 months. That continues to be the name that I think, especially when it comes to a name that investors are underestimating what this is going to look like. To me, it's Tesla, and obviously followed by Massive AI, Palantir.
Eric, do you have a view on Tesla or Palantir?
I love them both. I think they're both great companies. Alex Karp had an amazing interview just on the network, just in the last half hour. It was riveting to watch. But they're both huge companies, and so like you said before, I like to kind of play for some of the smaller plays. And even a company like Opendoor, you'd think, is that an AI company? But think about like what they're trying to go after, and there are going to be so many stories like this. They're trying to revolutionize how we buy and sell houses, and move away from an agent model to one that's purely like AI led. And so what will that look like? Well, they in the summer, they had 1,400 employees. Keith Rabois, who's now the chairman of the board, has said, we want to fire 90% of those people and replace them with AI. So we want to totally rethink the entire real estate transaction process, AI led, including like home inspections, including like AI, what do they call it when you sort of frame your house, you sort of do up your house and make it look best. That's all staging. Yeah. AI staging now is a huge thing. So it's going to be interesting. Like that's just real estate, but every industry is going to be revolutionary.
And Julie, I'd also add, the bullishness of colors on this panel. Jackson's dressed a little bad. No, he's dressed a little bearish. I expect
Dan, this is how Canadians dress when they want to look like Dan Ives. This is as flashy as we get up in Canada. Okay,
We've all tried. I think.
We're sort of complimentary here. I think all of us equal Dan's shirt is what's going on today. Gargi, I want to follow up to you on something that Eric just talked about, which is those layoffs, right? if there is going to be this disruption, right? And it seems like the more progressed it gets, the more it looks like there is going to be labor disruption. There's also some maybe cyclical labor disruption under the surface. So, okay, we have this great AI future. Who's going to have a job to have money to spend on this great AI future? If I don't have a job, I'm not paying, as Max Levchin was just talking about, I'm not paying an AI agent to buy my groceries or spending that money. So how do you think about that?
You know, Julie, and I think we heard that when we, before our segment started, when we heard from people across the street, if you will, there is that concern around my job is going to get taken away. But if we take a step back and think about where we are from an economic cycle perspective, unemployment rate, at least the starting point, is very, very strong. And I think we have to take solace in the fact that the consumer is in a very good shape right now. Unemployment rate, I mean, we haven't had the picture in a while, but based on what we see, it's still a strong labor market. And as of now, the small impacts on the unemployment side is coming through for a very specific cohort. Now, we've seen revolutions like this in the past. I mean, there were people that entered things by hand in stores and in companies, and then you had the computer come in and replace all of that. What happened? People had to get retrained. It took time, and at the end of it, we had a more productive economy. So I don't want to diminish the fears that people have about getting replaced by AI. I do think it's something that you are palpably seeing, but at the same time, I want to point to two things. The research so far shows that if you're using AI to augment your skills, you're likely to be in a much better place than if you weren't using AI at all. So for those that are not using AI, I would say make sure that you're using it for augmentation of your current skills. And the second is be invested in this AI revolution, whether that is through equities, whether that is through private credit, whether that is through infrastructure. Make sure you're a part of this, and then have a voice. Have a voice in the process. There's going to be, hopefully, regulation around this, making sure that your voice is heard within the process.
I love that idea of like hedging that you could potentially lose your job or have to shift your job by investing in some of these AI companies. That's a really intriguing prospect.
Don't go anywhere. We've got you covered with all the action following the closing bell. Stay tuned for Market Domination Overtime.
The early bird catches the gains. This is Morning Brief Market Sunrise. Live from London, we deliver an early read on global markets, from overnight action in Asia to real-time sentiment across Europe's major trading desks and a live look at US futures. We cover the stories to help you, the individual investor, get the edge with actionable financial information and unbeatable context. So grab that coffee, tap in, and
Extra absorbent, even for your messiest meals. Vanity Fair napkins. Elevate every day.
For the most important night of the year, he counts on Harbor Freight.
GCU is one of the nation's largest universities, with over 360 industry-shaped programs, a top-ranked campus, and a mission to provide affordable Christian college education.
Of two sets of opinions, and both are based upon, one view of the world where I want this to happen, so I'm going to will it into being, and another view which is this can't continue, and you have to make your own mind up.
Right, and we'll get a gut check. I would guess, I think it's safe to say mañana, when NVIDIA reports results. Mandeep, are the hyperscalers, the Meta, the Amazons, the Alphabets, the Googles, the right companies to focus on to determine whether the AI spend is really going to, continue to provide the returns that everybody expects? Are they the right companies to focus on?
On the infrastructure side, I would say yes, simply because they have the balance sheet to keep funding this. And look, next year we are talking about another year of 50% sort of capex growth. So we already had 2 years of 50% plus capex growth.
Yeah,
we're talking about a third year of 50% or around about capex growth. So from that perspective, these companies have the balance sheet. And look, when it comes to generative AI returns, you need the data for AI. Who has the data? It's the public cloud companies. So from that perspective, even a Microsoft partnering with Anthropic makes sense, because Microsoft wants
even
to
though Microsoft is such a big investor or owner of OpenAI.
Yeah, and they want to diversify from OpenAI. Anthropic wants access to Microsoft customers because that's the one way they can, drive adoption of their LLM. So, look, there is high synergy between public cloud and AI LLM companies. And that's why these companies are so well positioned. They may see a margin compression for a quarter or two, as we saw with Amazon. Right. But over time, these are very sticky businesses. They have the enterprises logged in. All the infrastructure is being run on their clouds. And so layering on AI is so natural for them. And that's what they've been doing.
All right. So, Ian, come on back in. So, NVIDIA, obviously earnings tomorrow. Just one moment, folks. We do want to remind everybody what's been going on in D.C. We know President Trump meeting with Saudi Prince Mohammed bin Salman. They've had a joint press conference earlier today, and we are seeing them leave the White House as we speak. This is a live shot, everyone.
And look, there's always an angle when it comes to chips and technology because the U.S. does plan to greenlight the first sales of AI chips to the Saudi Arabian AI firm Humane. This, according to people familiar with the matter, marking a win for the state-backed venture as Saudi Crown Prince Mohammed bin Salman meets with U.S. President Donald Trump. He's leaving the White House right now. We expect the two to get together later for that dinner, too.
But are they the most sophisticated AI chips? I have a few questions. Hey, we should point out they're going to have a dinner this evening, not a state dinner, but a black tie dinner. And we do know Elon Musk is among those that are expected to be at that dinner. So we'll continue to report that out. We're talking with Mandeep Singh of Bloomberg Intelligence, Ian King of Bloomberg News. So, Ian, back to you. NVIDIA earnings tomorrow. So what are you expecting to hear? What tells you that this AI spend build out still makes sense? And these high valuations, perhaps. I know you're not a Wall Street analyst, but what do we need to see and hear from them that shows that, okay, this is still a build out?
I mean, in a sense, they've already played their hand for this earnings go-round. You remember in Washington late last month, Jensen Huang came out and set out this ambitious long-term target, said basically, hey, we've got these orders in the bank. So I don't think near term there's anything that he can do or say or should do or say that would change the narrative too much. I think that the way to perhaps frame this is to judge these companies by the targets that they set for themselves. And that goes beyond just filling data centers with new computing. You referenced the visit in Washington going on. That's sovereign AI. So governments need to build these things, state-led efforts. That's going to create new market. Okay, check that box. But then look beyond that. Look at, are we influencing the transport industry? Are we changing the pharmaceutical industry? Are we changing how factories are built, how ships are built? And these are the things that AI is supposedly going to change, going to revolutionize and justify all of this spend on the back end. Have we seen that happen yet? Well, ask your economists. And I think the answer is probably we haven't seen that manifest itself in concrete terms yet. It's been very much a tech story. If it goes beyond tech, if it really has that profound impact on the economy, then maybe all this money being spent is justified.
So, Mandeep, when do we see this happen with these other companies? When do we see these economic effects?
I mean, when I look at that ROI question being posed to me, I track it using the lift that these cloud providers have seen. So Microsoft's growth was around 20%. Because of generative AI, they are growing their cloud business 40% now. Same thing with Google. They used to grow 20% was the public cloud growth rate. Now we are talking 35 to 40%. Where is that incremental growth coming from? It's AI workloads. Similarly, you have a company like Cursor. I mean, it just garnered a $30 billion valuation. They have revenues to show. ChatGPT, Anthropic, these companies have more than, Anthropic has 7x its revenue this year. Even though it was a small base, they're a $7 billion run rate company. Yeah. So that, to me, is how you would track ROI. Now, can they sustain those growth rates? They better should. Otherwise, you will see, a pullback in this build-out.
Yeah, the markets will certainly keep them honest, we would hope. Thank you so much. Bloomberg Intelligence Global Head of Technology Research, host of the Tech Disruptors podcast, Mandeep Singh and Ian King out there on the West Coast. He's Bloomberg News U.S. semiconductor reporter, counting down to the close.
market that still have that secular theme, even if this AI narrative right now is a little bit at risk. Keep your eye out on Bitcoin as well in the crypto trade. We did see a little bit of a bounce today. Let's see if we're going to have a follow-through day tomorrow. I think that's going to be a key liquidity gauge for the markets, and I think that's another factor that we have to be mindful of. There is not a lot of depth in this market right now. It doesn't take much to really move prices. I mean, we had 1-minute candles that were 10, 12 points for the S&P 500. That usually is not something that we like to see, and that's where you can kind of get these fake outs here. But overall, I think that at the end of the day, there's been a lot that's taken out of this market. I think you still have opportunities for this to at least try to have a dead cat bounce to the upside. We'll see if that takes place. If NVIDIA comes out and they say something very negative, that could be a risk for the S&P. I just find it very hard. Jensen Huang is doing a phenomenal job with these earnings announcements and his conference calls in order to try to paint that picture for the vision for artificial intelligence moving forward. It hasn't skipped a beat. I'm not expecting him to do so tomorrow.
And KG, with NVIDIA, we've seen Jensen Huang, continue to perform. The company continue to perform. As far as the setup, we've seen NVIDIA just this month down 10% coming into their report. They are expected to see more than 50% growth in terms of revenue. I think it's projected to be about 55%. But we also saw today the announcement of another big AI partnership involving NVIDIA, which usually is enough to give a boost. And NVIDIA and Microsoft, the other company involved with this Anthropic deal, both remained firmly in the red. As far as that setup going into their earnings tomorrow, that is a bit different than some of what we've seen.
It is, because the nature of the deal still seems like it's still recycling dollars. I don't know if there's a better way of really kind of explaining it, but I mean, the one is spending $5 billion, the other one's getting $5 billion and giving it to another person. I mean, that's the cycle that the market really does not like to see, even though these companies that are a part of this deal do have a significant amount of cash on hand. I think this is more anxiety when it comes to NVIDIA's price action, more anxiety about the earnings report tomorrow. We have to be mindful, last earnings announcement, they did miss on data center estimates. And so I'm not sure if analysts have actually re-rated that or maybe slowed some of that growth compared to what we actually saw for last quarter. If we do see a miss on data center and it's not because of the supply chain issues, then I think that causes a little bit of a concern for the broader equity market here. But there is definitely a play to be had, and I'm not saying this is a recommendation, but you could make the case that a lot of institutional investors right now are probably looking at buying volatility on the S&P 500, or actually selling volatility on the S&P 500, buying vol on NVIDIA in the event that this is actually going to be a non-event and volatility does crush, moving equity markets a little bit higher here. There's a dispersion trade, and that's usually what options traders are really calling for, and you'll call it, that could be had here, because this is the last of the mega cap names to really kind of report within this earnings cycle here. I think there's a lot of opportunities in this market, but these deals aren't providing that boost like we saw in the past. Even when you're looking at the White House in Saudi Arabia kind of announcing that increase in spend. Oh, is it $1 trillion now that they're going to spend? I'm not sure the time frame within that, but you really didn't see that much of a bounce in the market because of that announcement either. So it's just losing some of its luster. And unfortunately, I'll even go a step further here. China trade talks, those deals that we might be signing on Thanksgiving or right before Thanksgiving, they're not providing a bounce to this market either. So a lot of these narratives are now being put to the wayside. We're looking for something new.
Yeah, the market sort of seemed like they're a little bit on edge, waiting for a little bit more detail, which remains elusive on that trade deal. Also around sort of the ROI, because, you can throw as many deals out there as you'd like, but at the end of the day, the market wants to see monetization. It wants to see proof of all that spend. And obviously, the markets had already been on edge, like you pointed out, KG, around this circular financing. And so this is just sort of added fuel to the fire with another sort of example of how this is all happening. So, yeah, you raised such an interesting point. What is NVIDIA going to say tomorrow? I mean, I know you touched on some of the demand. Jensen Huang has been very good at being a sort of diplomat. He's at being a sort of PR guy as well, even though he had to sort of retract a couple of comments in the last couple of weeks. But we won't go there. But is it going to be around this sort of margin and moat degradation? Because that's something that analysts have been pointing out to me, particularly if, the whole conversation around how there's plenty more fish in the sea right now with what AMD is doing, whether that sort of takes a hit to some of the market share.
So the operating margin or their guidance for operating margin still seems like it's still intact. I would see a lot lower than what we are hearing from estimates from the executives here, but a lot of that is because of the ramp-up cost for getting these GPUs out the door, especially when you're looking at Blackwell and ramping that up. And I think over time, if you're able to get to that market or that metric that they want to be able to hit, I think the market's going to be fine with that. I think we are probably already anticipating CapEx spend still staying fairly healthy here, which is going to drive growth. I think they're going to talk about that on the conference call. What is probably underpriced is sovereign spend on this. I mean, we don't really talk about the countries that are spending a lot of money on these GPUs as well. Are we going to start seeing an expansion there? That was once again another topic of conversation in the White House today. Is NVIDIA and AMD going to be a part of that distribution when you're looking at the UAE, if you're looking at Saudi Arabia, maybe some other countries there? That's something that we don't talk about a lot that could actually grow pretty exponentially over the next couple of quarters here. And if they talk about that a little bit more, that could be a driver to the upside. And then looking at the software space, we always talk about the hardware, but they do have a software stack as well. How much growth are they seeing there? They kind of have a little bit of an open source type of model in-house that they're leveraging their customers already to kind of expand this ecosystem. How are they seeing growth there? How is that driving top line growth? And I think that would be, once again, another beneficiary. The thing that could be the wild card, do they actually see a slowing? And do you also see a slowing in some of the earlier models, the H100s that they're still producing here? Are they seeing a complete fall off because that refresh cycle, which is something that's very new for NVIDIA to refresh every 9 months to a year, are they starting to see a fall off there? That could be also another big risk here. I think there's more upside potential than downside risk for NVIDIA in these earnings, or at least staying within the market maker move, which is around 7%.
KG, thanks for being with us today. We appreciate you breaking all of that down, especially in advance of NVIDIA's earnings tomorrow. And coming up, we're going to break down this recent bout of volatility, look ahead, continuing to look ahead to those earnings we've got coming from NVIDIA. Market on Close. We'll be right back. Stay with us.
I'm Kevin Green.
With us. A warning from JP Morgan Chase Vice Chairman Daniel Pinto. He said and kind of gave us all a heads up that valuations in the AI industry are due for a reassessment. It's something Tim and I have been trying to get into today, which could reverberate across the stock market. Here's what he said.
It's possible there is probably a correction there. And that correction will also create a correction in the rest of the segments in the S&P and in the industry, because you are probably, in order to justify these valuations, you are considering a level of productivity that it will happen, but it may not happen as fast as the market is pricing.
There you have it, JP Morgan Chase Vice Chair Daniel Pinto. Earlier today, that was at the Bloomberg Africa Business Summit in Johannesburg. Curious what buy or sell signals our next guest is seeing. Great to have back with us Vance Howard, CEO and Portfolio Manager at Howard Capital Management. About $6 billion in assets under management. He joins us here in the Bloomberg Interactive Brokers studio. This is the question we've been wanting to ask you since, last time we spoke to you. Is the HCM byline model telling you to buy or sell right now?
It's telling us to buy. The HCM byline's positive. Any pullback's buyable till it changes trend, and sort of discard the noise and just buy what's actually happening. The market's very, very healthy. You've had 6 great months. I mean, how do you not have a pullback after 6 months?
Just one step back. Explain the HCM byline model and the data it takes into account, and then what it tells you to do.
It's a non-emotional, mechanical, repeatable process, because I want to take as much emotion out of it as I possibly can, which is incredibly challenging with the amount of things that are thrown at each and every one of us every day. But it's a math-based tool, and it's just a trend indicator, and we think it's a very good trend indicator. It's done very well for us. Perfect, no, but good, yes. So.
Does momentum, though, the momentum trade mess it up at all?
No, not at all. But I love the momentum trade because I love to be in those stocks. I love to be in those sectors. You got to trade momentum. You can't sit in dead money.
Yeah, but when is momentum FOMO? Like you're just tracing something without really fundamentally thinking about it.
Well, as long it's a big computer game.
Or does
anymore.
it matter?
Well, it's a big computer. Yeah, it doesn't matter anymore. It's a big computer game. I mean, you're trading against algorithms anymore. What's 85% of all the volume?
But don't fundamentals matter?
Well, they're always going to end up mattering in the end. But look at what's happening, Carol. When you look at what's happening with AI, look at what's happening with Tesla and that robot they're coming out with, Optimus. How much is that going to make an impact on so many companies' profitabilities and earnings per share?
That's if they come out. That's if they come out with the robot.
Do what?
That's if they do come out with the robot.
I think 2026 he's going to.
You think so?
Oh yeah.
He's not. He doesn't always meet deadlines.
But when he does, it's usually a big show. They've got one of those things walking around Austin, Texas, right now with a cowboy hat on, literally walking.
Definitely
around the
no
whole
person
city.
inside it?
No.
Okay.
And he stops at every red light. He stops at every stop sign. He gets out of people's way. This thing is amazing.
Wait, what do you think it's going to do, though? How do you think it's going to impact our life?
Okay.
Are you real? Come on, we like.
Yeah. Here's the thing. Here's how it's going to impact your life. Let's take and I've thought about this a lot with our trading team. Let's just take Starbucks, for instance. What if you got one person working the cash register and 5 people that are robots that are serving the coffee? This only costs 15 to 20 grand for Optimus, the robot, to make a cup of coffee. You've eliminated 4 or 5 jobs right there. You don't have to worry about somebody complaining, coming in for work, getting sick.
But do
holidays.
robots go out and buy high heels? Probably not.
No.
So like I do
That's a
think
good point.
about
That's a really good point.
Like I do think about what robots are not going to be spending in the economy and what that means
That's
longer
exactly
term.
right. I think you're going to see unemployment organically move higher. But I think you're going to see corporate profits in a lot of these companies move higher also. Look at what happened with Walmart. Walmart's a boring company in my opinion.
But what happens if there isn't a lot of consumer spending going on, which is so much the backbone of the economy? Doesn't that filter through? And don't we have lower economic growth? And are people out of work? That's not a good thing.
That's not a good thing. It's a terrible thing. But look, I can't change it and I can't stop it. Neither can the 3 of us inside this room. But what we do have is the HCM byline. So if stocks want to sell off, we got a mechanical system to say we need to unwind some positions.
Okay, so when was the last time it told you to sell?
We had a sell signal in April when we had the tariff tantrum, and then we came back in, and it was not a great trade for us because it was so violent, so volatile, because it is a trend indicator, and when the trend changes all in like 48 hours, that's tough to trade.
So
and if you'll remember, before we jump onto that, you'll remember the Nasdaq was down 28% in a matter of days.
Yeah,
that's a tough trade.
The S&P 500 low for the year was back on April 8th. What day did you sell and what day did you get back in? Do you remember?
To be quite candid, I don't remember.
But did you miss some of the upside since
we
then?
missed some of the upside. We did, painfully for us. And when you trade
and
a
you
trend
felt some of the
indicator-
downside.
We did. And we did. And it was a painful trade for us. I'm going to admit it. It wasn't a great trade for us. Remember the byline
was
is a
for
70-30.
everybody, it feels like.
I know. But it's a 70-30. 30% of the time it's not going to work. So we're going to get whips all 30%.
And do you go all in and all out at times?
No, we scale.
You scale.
We do
scale. Because
So-
we were talking with somebody just last week, a manager, who says that, this was a really interesting conversation. He basically said, I'm so tactical that I'm willing to go to 100% cash for all of my clients at any given moment. Do you ever do that?
We have before. In 2008, we were 100%. The only way that we'll go 100% to cash is if the banks are imploding, and that's what was happening in 2008. So if we're 30% out or 60% out, the all or none game is a tough game to trade.
It is. I mean, the tax implications of that are huge.
Well, tax implications, but catching both sides of the trade perfect are really tough. So
he said, I would rather pay 20% taxes than have 30% declines.
I forget who that was. You're right. Like that, I can't remember.
I'll find it. Yeah.
Well, the private credit market
you read
create
about that today.
something.
It was
akin,
Eddie Gabor.
Oh, thank you.
Sorry.
Akin to the great financial crisis, because it does feel like increasingly we're seeing things every day. People are worried.
Yeah, and I think that what should worry people is our national debt. I think that's a tipping point. If that cracks, I think we've got a real problem. And,
like the great financial crisis?
I think like the great financial crisis. I think
systemic.
It's going to affect everything. I mean, the banks are going to lock up, credit's going to lock up, people are going to be short or long-term loans. And
When you say banks, you mean the big banks too?
I think the big banks, of course, and I think it's going to affect everybody. I mean, what do you got? X amount of trillions of debt that we currently have, and every day it's getting larger and larger and larger. It's unsustainable. And if they keep printing money, Carol, your dollar and my dollar all of a sudden it's not worth $1, it's worth a nickel. And so you got it. It's the printing of money is going to have to stop too.
What about the AI bubble? I shouldn't call it bubble because we don't know if it's a bubble. We just know it's a big spend right now.
Which bubble? The AI? Oh,
AI.
It's not a big spend. This is different. When we looked at, you remember in 1999 and we had the 3-year bear market and they had all these tech stocks that blew up. They weren't making any money. They were not making any money.
You think
Look
this
at what's
is different?
going on. Oh, they're making money hand over fist. They're making money so fast they can't spend it. What happens if in 5 to 7 years to 10 years, Microsoft is so profitable they're paying an 8 or 10 or 12% dividend?
So 10 seconds, you're still owning the big Mag 7, the big tech, the hyperscalers?
You're
buying them on pullbacks?
I am hoping that NVIDIA comes out with something that shocks the market. They drop down so I can buy more. Because 5 years from now, NVIDIA is going to be a lot higher than it is today.
It's a shame you're not more bullish. I'm just kidding. Vance Howard, Chief Executive Officer, Portfolio Manager at Howard Capital Market. Thanks so much here in our Interactive Broker studio.
To justify a company selling at, say, a $4.5–5 trillion market cap.
Bob, I'm glad that somebody's saying something out aloud that many perhaps are too afraid to, and that is what you pointed out in your note, that the stock market seems to be led now by Bitcoin and crypto, as silly as that may sound. But as silly as it may sound right now, I mean, what we've seen as far as the trend is that sort of risk off in Bitcoin. Then obviously we did see subsequently the markets pulling back, and then we've seen an outperformance in some of the crypto prices, but also the related stocks today. And then we saw a little bit of rebound off the lows. So what is this sort of trend telling you? I mean, are we past the weakness in crypto now, or is this a canary in the coal mine?
I really have to see Bitcoin and some of these cryptocurrencies like Ethereum stop going down first. So once they stop going down and they settle down and they build some sort of a base that they can move up through, then I'm going to be convinced that the coins have stopped falling in value here. So that's going to take some time, Sam, and I think weeks, maybe a couple of months or something like that. But as of now, I'm not still convinced yet that that Bitcoin's coming down. Now, I looked at the Bitcoin futures chart. I do see some support in the high 70,000 area, and that's a good another 13%, 14% down from where we're at right now. So if we even come back down there and land there, I think there's going to be some buyers that are going to step in and buy. There was good strong support at that area earlier this year. So I think that, again, as you alluded to, what I mentioned about the silliness of the markets following. Look, the markets often follow the bond market. It follows whatever is the flavor of the day. And if it's Bitcoin and money seems to be flowing into Bitcoin in and out, well, the market's going to follow in that direction as well too. So when Bitcoin was rising up earlier this year and even in late 2024, right after the election, well, we saw the stock markets rising in kind. So we could see that connection there together. The correlations were real strong. But what goes up together also tends to go down together. So that's why we're seeing this strong correlation right now happening.
Yeah, certainly making a connection there. Bob Lang, thank you so much, as always, for joining us today. Really appreciate your time and your analysis and insights. Bob Lang, Explosive Options. Coming up next, we'll close out the show with our final takeaways and what we're watching for tomorrow. Market on Close. We'll be right back.
For instant reactions, earnings breakdowns, and hot takes.
Closed-end funds with expenses. It's Bitcoin with expenses. Some of them, like Strategy, are uniquely positioned to maybe add extra value. I think there was a trend of just so much excitement around Bitcoin and public markets that people rushed in. What I'm seeing with groups that work—
the opposite of any work platform we tried in the past. We tried other work management platforms, not naming names. They all suck. Monday, total opposite.
We've stopped going up at the moment, and that is what's true. If we do continue from a momentum perspective, and what large funds are probably screaming about is that when you lose this, what happens is that you tend, when you lose something like this, is that you tend to travel towards the 200-day simple moving average. Here's another one here where you tend to travel towards the 200-day simple. Here, you tend to travel towards the 200-day simple. Pretty much nearly every time in history. It doesn't mean that you breach it, but you tend to travel towards it. Let me get back to where we are. And because this is a very steep and we'll say uncorrected slope, and the trend has, as of today, day one day doesn't make a trend. We have a lot of news coming. Basically been today broken. If it does continue, then that does, I heard you say a number earlier, that does bring you to 615 where the 200-day simple lies. And that actually would be your dip buy, which also, by the way, kind of lines up with these prior tops over here. And that would be that typical pullback. That is not a bear market. That is completely different, right? And to be crystal clear, that is a typical pullback, and that is not a bear market. A bear market is completely below all of these SMAs, which we are very far away from. We're not even close to that. So no, we're not talking bear market. No, we have no signs of bear market. We only have signs of a typical pullback, and that is absolutely to be expected in any normal market. And that right there is actually healthy.
Do you think at all that there's an argument for the S&P 500 has topped? Like, is there a legitimate claim?
From a price topped in terms of like for this week?
No, for the next year. Like, it's the top of the cycle. Like, from a technical, maybe fundamentals are different, but does the technicals say that?
You can't say that from so we're running out of time, but like the only thing here is that here's the last low, here's a high, here is a lower high that we caught last week, and we as of today have breached that lower low, have breached that most recent low. Unless we're trending below 650. No, I just, you like for the next year? No way, man. No, because, okay, so Amit sent me this video earlier and I was trying to understand what his context was. But when I say typical pullback, this typical pullback will normally resolve itself like this.
Right.
Like, to be fair, like that's normal. Like that's normally how this pullback will resolve itself. I mean, end of story. So no.
defending 615 is very important, but we are far away from even touching those levels.
Yeah. So this normal pullback will typically resolve itself just like this. And by the way, you guys know this kind of pattern. This is Amit's favorite pattern. We're one of his favorite patterns. He won't get his double bottom. Maybe he gets his double bottom around here, and then he gets another double bottom around here. Why shaking your head? But no reason. This is way before everybody else sees it. Where your cup and handle is going to show up. Just so you know, you love my art skills. I mean, that wasn't bad. But quite frankly, that's how this. If you want to know how things evolve as charts, it's literally just like this. But yeah, that's a long time away, and that's how a normal chart would actually pan out. So yeah, no, this is not. To your question, it's all about your time horizon. So can it have topped out in the near? Well, I mean, if that happens, like that's going to take a while to actually play out, right? So that's like, I mean, that's a while. So the only thing, or quickly we reclaim, this is 667 and we're back on our way. So in this instance, so I have a couple lines on here and I know we're going a little bit over, so I hope if that's okay, that's fine. Couple lines here. So red on my chart. Inside this is actually a 3-month range. So within the last 3 months, first level, that's important, 667 and a quarter or 667.30. This is a big deal right here. We really have to reclaim this, and that's going to tell us if we're able to hug that 50-day simple moving average. If we can stay at least around 667, 668, then that 50-day simple moving average is actually going to be just flattening, and it's not going to be heading downwards. Same thing with the 20-day simple. That will keep those SMAs at least flatlined. Near term, 663, which is basically just last week's low. Near term, if we can get over 663, that does give us this small little pop. This is a small chop zone, and this gives us right over here. If we do hold that, then what you would expect, just very basic price action wise, is you would expect, actually, you might even expect a bit of a bullish bounce that looks possibly a little euphoric. And I would caution that euphoria here and just know that, hey, there is a possibility that we even do bounce here and hit about a 50% retrace of last week's range, which is going to line up to the 20-day simple moving average. Because remember, these are all going to act like magnets. And in this moment, right around this level, around 678, that's where a potential third lower high could show up. This could be what I would call in the trading world, we call this like a bit of a lifeline, anywhere in here. And we've actually done this kind of exercise many times in the past. But this is, let's say, if NVIDIA has a really good story to tell and things look good, that's actually what that would look like. And I would expect something like that to be pretty typical here, because a breakdown into a pullback is not a one-day thing typically. It is a series of events. Yeah. It doesn't happen overnight, not normally. Normally, we get a bit of a chop and there's time to make a decision. I mean chop. So quite frankly, I would expect something like this. And
that was your biggest points loser on the day. That's why we had such a negative day in the markets. In terms of what did well, healthcare, energy, communication services, consumer staples as well. But again, tech, consumer discretionary, and industrials, the biggest weights, Carol.
All right, you mentioned healthcare, and kind of I'm looking at the medical space here as really a top performer in today's session. In fact, the number one gainer in the S&P 500. Medtronic, ticker MDT, that stock finishing with a gain of 4.6%. We did see it up the most in 5 years, its highest intraday in about 3.5 years. The news, the medical device maker lifted the bottom end of its range for adjusted profit forecast for the year. Company also boosted its organic revenue outlook following better than expected results in the second quarter. As I said, I just want to clarify, up the most in 5 years and its highest intraday in about 3.5 years. So anyway, some outperformance, not a name that we talk about on a regular basis. Merck, also an outperformer here. This one up about 3.9% in today's session. The drug maker set a mid-stage trial of its drug for a rare form of high blood pressure, met its main goal. So analysts see this as a win, a trial win, as a potential for an expanded market for its drug Winrevair. Stock, though, still down about 2% year to date. And then I just want to mention Strategy, because this one up about 5.8%. I'm not exactly sure why. Bitcoin has fallen so much, about 30% from its 2025 peak. So we did have a story in the Bloomberg, a rare euro-denominated preferred stock offered by Michael Saylor's Bitcoin treasury company has fallen below its offer price. I don't know. I'm not quite sure why
Bitcoin bounced off its recent lows today, so maybe that had something to do with it. I don't know.
Yeah, and you're also talking about a stock that's down, 37% in the past 6 weeks, so that could have something to do with it too.
Thank you, guys. Thank you for the
Sure
assist.
thing.
It's a group effort.
Glad we can help.
I will give you a pinky ring now.
Okay, thank you.
All right, let's talk about what's going on the downside. Stocks in the red today. NVIDIA shares falling 2.8%, down for another day. The company, of course, reporting after the bell tomorrow, just after 4 o'clock. We'll have special coverage in those results live as soon as we get them. Shares falling as much as 3.7% earlier in the session. They're now down 12.4% from those all-time highs back in October. We should note, too, Microsoft, along with NVIDIA, committing to invest up to a combined $15 billion in Anthropic. That's a move that ties Anthropic, which makes Claude closer to two of the biggest backers for its rival, OpenAI, which of course makes ChatGPT. In tech, also today, Amazon shares fell 4.4%. Microsoft closed out the day 2.8% to the downside. These companies saw their ratings cut to neutral from buy on Tuesday as Rothschild & Co. Redburn's Alexander Heisel downgraded the stocks for the first time since initiating coverage back in June 2022. He writes that the industry's, quote, trust us, Gen AI is just like the early cloud 1.0 narrative looks increasingly misplaced. He stated that underlying economics are, quote, far weaker than assumed. And finally, Home Depot shares falling 6% today. The company cut its full-year earnings guidance. It warned that some unsteady consumers are hitting the pause button on big-ticket home purchases. We're going to get more numbers tomorrow. We'll get Target, we'll get Lowe's, we'll get Williams-Sonoma, we'll get TJX, we'll get Walmart later. this week, so we'll get a better idea of what the consumer is doing, seeing if this is more of a one-off or if this is something bigger.
Well, and just an honorable mention, I was keeping an eye on shares of Klarna. They finished down more than 9% on the day, worst day since they went public just a few months ago. And the idea that they're setting aside a lot more money, Tim, for potential credit losses, that seemed to rattle a lot of folks. And when you start to talk about consumer spending, it's not always just about whether people want to spend, but also the idea that if you have a more holistic environment where things are deteriorating, does that then become a factor with regards to people continuing to spend?
Yeah, I feel like these buy now, pay later, you think that just because these companies are busy, it's a good sign, but in terms of for them, but what it says about the economy and maybe consumers feeling a little bit
what are
not a great
people
thing.
paying later for? That's the big question.
Yeah.
And are they paying later?
Yeah.
Right.
Yeah, and these are some of the things that, of course, the Fed is going to have to debate at its meeting in about 3 weeks. And you take a look at where yields went today, I think it really shows you kind of the breakdown, I think, in bets and exactly which direction the Fed would go. We should point out that the implied probability on the Bloomberg terminal of a rate cut in December is still under 50%. But when you consider some of the deterioration we've seen in labor market data, maybe some of the deterioration that we're seeing in some of the consumer company earnings, maybe that changes what exactly the Fed has to do when they meet in 3 weeks.
All right, guys, let's get to some stories that are certainly on our radar here. We've been focusing, I'm sure you guys too, out of the nation's capital, the White House, President Trump's meeting with MBS, Mohammed bin Salman. Okay. Well, what?
I thought you were going for the other story out of Washington.
Oh, okay. Sorry.
This is a market show, Carol.
I know. I'm trying to keep it, family show. Right. Hey, having said that, the Trump Organization planning a luxury resort in the Maldives with a Saudi Arabian partner and plans to tokenize the hotel development project.
That sounds interesting.
It's the Trump International Hotel Maldives. It'll include 80 ultra-luxury beach and overwater villas. It'll be built with Dar Global PLC, the two companies said in a joint statement on Monday. It'll also mark the launch of the world's first tokenized hotel development tied to the project.
It's very dark outside behind you right now, Tim.
Yeah, that tends to happen this time of year. If you actually go to the southern hemisphere, it's light and warm this time of year.
Did you have nothing to share on our story?
Absolutely not.
I can tell.
All
right, Katie, over to you.
In this
Godspeed for all you investors in
means,
tokenized Maldives, Saudi Arabian-backed.
You can buy digital shares, perhaps, in the form of tokens. Yeah. Sounds exciting to a certain type of investor. Let's talk a little bit about Topgolf.
Someone will make money on
golf. Romain, sitting to my right, does. Apparently, Topgolf has agreed to sell a 60% stake in Topgolf and Top Tracer businesses to Leonard Green and Partners. That is a LA private equity firm.
All I have to say, I just hope they don't mess this up. This is actually, Topgolf is really kind of one of the big success stories. I mean, when you think about kind of what they did and the kind of gamification of a game, but the idea they just made it a lot more accessible. It's fun. You can take everybody there. It doesn't matter your skill level. And of course, we know whenever private equity gets involved in something, we got.
That's the thing. If you're trying to get into golf, it's a little bit of a chew. Really, the only intermediate step is mini golf, which I understand is not very close to the actual game.
Not at all, Katie Greifel. Do you golf?
No, not much of a
What about you, Carol? Carol doesn't.
No, but my dad was a big golfer. My brother.
Obviously, I'm not a golfer.
Okay. All right.
Obviously.
So this is the wrong crowd to talk to. Yes.
Oh,
and a great one too.
Loves to hit the links.
Like 110. What's your score?
110. How dare you?
He's well under.
I'm like 18. I'm like 18 handicap. There you go.
Wow.
Not to brag.
All right.
Where do you have the time? Where do you have the time to do that, Romain?
That's what I'm saying. With full-time job, family. Imagine if I get laid off. I'll be on the PGA Tour.
Don't say that.
That's like Steve Cohen's big bet that we'll become so much more productive in the coming years that we'll have more time to play golf.
That is.
Will we have money to do that? Because that's why we work.
Yeah.
All right.
You need jobs.
We got to wrap.
To pay for that.
Our cross-platform. Shh.
Have you seen the green
Radio, TV, YouTube, Bloomberg Originals. I hear nothing. Katie and Romain continuing there on the close. Tim and I continuing right here on Bloomberg Business Weekend.
Is it about the infrastructure build out, and what are you watching for in terms of the choke points?
Yeah, I would say, first of all, for the next 2 years, they're going to be completely busy and sold out of their chips. So we think, if anything, the NVIDIA earnings expectations that Wall Street has, and that's sometimes you have a perspective by sitting back a little bit, they're too low. So we think NVIDIA and the semis are still very attractive because there's no way that they're not going to keep building these data centers. So that's number one. The number two, the thing in the kind of AI ecosystem that we'd like to point out is how unbelievably successful OpenAI has been. As a single company, they are now getting 800 million monthly users. So they're way ahead of everyone else, way ahead. And then, but they also don't have as much revenue as everyone else, right? So can they pay for it? But I guess our feeling is because they're so far ahead of everyone else, they will find a way to get that equipment paid for.
So let me ask you this. One of your notes, you talk about the gateway to commerce risk as it relates to OpenAI and how it might dominate traffic or potentially lead to a bottleneck or act as a gatekeeper. How do you perceive that? Do you perceive that as a risk or as an opportunity, or a little bit of both?
It's sort of like this historical macro voice in me. I can't get it out of my head. It's just the world is changing so fast. It's like literally for the last 30 years, all we've cared about is, does your company website come up when someone does a Google search?
Yeah.
That's really been e-commerce, right? The American consumer lives on Google. Now the American consumer is living on chat, GPT. It's totally changing. So what does that mean? Today, VanEck's website, 0 to 20% of website traffic is coming directly from AI prompts. That's number one, and that's good, but that's looking to grow. And guess what? Like of the AI chat volume that goes to Amazon.com, guess who has 90% market share? 90, OpenAI. Wow. It's all OpenAI. Right, so like OpenAI, you would have thought 3 years ago, can anyone compete with Amazon for books and all the stuff we buy on Amazon? Now, since all the traffic is going through OpenAI, OpenAI has partnered with two companies that can do the payments and have all the inventory, Walmart and Shopify. So now suddenly OpenAI with those two companies is competing against Amazon in their core business. It's like inconceivable that would have happened before.
Absolutely, and it makes me think of, there was a conversation I heard the other day recently here at the Exchange. It was a sidebar conversation, and you know how Googling has become basically a verb, right? Just Google it, right? I heard a young woman say to her colleague, just chat it. And I was like, are we at that phase now where it's becoming a verb, in terms of our lexicon, right? When you think about all the excitement around it, you talked about railroads giving the historical perspective and the percentage of dominance they had at the time. How do you monitor risk or the kind of, I guess, crowded nature of the AI trade, if you will?
Yeah, I mean, look, I guess at the end of the day, you have to use traditional metrics like the PE, forward PE of NVIDIA. So that's just very simplistically something I look at. And I'm just saying for a company that effectively has what I would call a hardware monopoly over this new technology, okay, there are threats and there are other players, but basically they're the new mainframe provider of the AI era. I'm really just not worried about the competitive threats to NVIDIA. And so 30 times forward earnings for a company that I think has a lot of demand for its products is not a crazy price.
Do you expect, when you think into 2026, do you expect AI as a kind of thematic, and when you think about your ETFs or just overall, do you expect that to still be one of the main themes? Thematic investing. It's a great question.
I've been asking myself that. I don't know, a lot of what we've been talking about in 2025 for investors is not just the semiconductors, but also the subsidiary beneficiaries of the build out. So nuclear power investments have done very well, like everything relating to data centers. Bitcoin miners that have pivoted to AI have been in the stratosphere, right? So I think a lot of that's overdone. That is overdone. NVIDIA I'm okay with because they have the monopoly, but I think some of these subsidiary investments. So personally, even though we have ETFs in those areas, I'm a little oriented towards profit taking.
Okay. Given the run that we've seen so far. Let's talk a little bit about another space where you all operate, and that's gold. We've seen some massive outperformance in this year in gold. Last year in 2024, you saw gold in the S&P 500 essentially moving in lockstep. This year, gold has overtaken that. Yes, we're not at currently at record levels, but there's been a lot of excitement around gold. What's your view on it as a thematic investment currently?
I guess from the 10-year perspective, I really like gold. So we started pounding the table on Bitcoin and gold in 2023. Again, so just some history on VanEck. My father started the first gold fund in 1968. And at that time, gold was pegged to the US dollar at $35 an ounce. So it was a pretty risky thing to say inflation is coming and this thing that's pegged is going to depeg. And gold, of course, went from $35 an ounce to over $800 an ounce. So I guess what we see now is that the role of the U.S. and the U.S. financial system is becoming less important in the world. And so I really see this as a decade-long trend where people like India's economy, they don't want to be dollar-centric. China's economy, they don't want to be dollar-centric. So I just think people are looking for a second currency, and gold is serving that role.
Are you worried about de-dollarization? Is that why you see that as the trajectory for gold?
Yeah, I don't worry about it because I think it's natural, right? So I think it's not bad for the world economy or the U.S. that gold has a higher role in our financial system. But yes, what I was describing we call de-dollarization, and I think it's going to last a lot longer. U.S. investors are still not piling on board, which is what you'd normally expect, right?
Right, yes. So you're paying more attention to like central bank buying?
Correct.
Okay. Let me ask you this, because you mentioned Bitcoin and, you all pounding the table on both Bitcoin and gold. And there are those, the Bitcoin believers and crypto hippies, as I'm told they're called. That's what they say they call themselves, even the buttoned up ones. Bitcoin has had quite a run recently, but it's pulled back. We're not sitting near the highs. They look at it as digital gold. Do you consider it less, or the least risky of the kind of crypto layers that we look at? And is it less, or do you look at it similarly to gold? How do you evaluate Bitcoin?
I think they're very similar in terms of their role in people's portfolios. It's sort of a store of assets, and they both have limited supply. VanEck was actually the first ETF sponsor to file for a Bitcoin ETF in 2017.
Which is
when it was
way before it was popular.
When it was $3,000 a token. So maybe I'm a crypto hippie. But I think, yes, we suggest that people own both. Just to have that as a role in their portfolios, because it helps during different market cycles. I would say the one negative thing I don't like about Bitcoin, having followed it for a long time, it's become very highly correlated with the NASDAQ. And people don't need just another risk-on asset in their portfolio just for the sake of having it. In the long term, pre-COVID, there was no correlation between Bitcoin and everything else, so it was a wonderful diversifier. So I'm just kind of hoping things go through cycles,
right.
Diane. I'm just hoping the cycle changes a little bit and that correlation comes down.
Do you think that's possible, given how it's looked at as kind of it has the pole position in crypto, right? And when you see how advisors, et cetera, say evaluate your portfolio, they consider that a riskier asset. It's hard for me to fathom that not being considered a riskier asset.
Yes, well, there's different types of risk, right? I was just really talking about how it interacts with other parts of your portfolio, the correlation. I mean, obviously, it's volatile. Now, its volatility has been coming down pretty dramatically. So, I mean, we just basically say it's like a religious war. Either you believe it or you don't, and we don't like to get involved with religious wars at VanEck. So you can do your Bitcoin, you can do your gold, you can do both. It's very hard to persuade people, but the point is more and more people every single year are allocated to Bitcoin.
I like that you put it that way, because that's kind of how I look at it in my head, Bitcoin. That's why I called it the Bitcoin believers. And I always say that I'm agnostic when it comes to that. So, I'd like to just, kind of analyze both sides of it. Let's talk a little bit about inflation and how it factors into your asset analysis and themes that you choose. How is that factoring into how you viewed gold this year and how you see gold positioning? As you mentioned, you look at things 10 years out.
Yeah. So, when we talk macro, you have to always look at government spending, right, fiscal policy, and, central bank policy or money supply and things like that, as well as what we've been talking about, which is technology. So I would say that, because the budget deficit is so high in this era, that's really the most important thing. The way I described it recently, it's like, sure, we're going to have a new head of the Federal Reserve next year, but as long as we have this budget deficit, there's a piano hanging over that person's head, right? Because now, I will say on the positive side, our budget deficit went from 6.5% of GDP last year to 5.9% in the year that just ended, and I'm more optimistic that it continues to go down because spending has, whether you like what Trump has done or not, spending has come down, spending increases have come down, and we have revenue from tariffs. So if the economy continues to grow, that should be good for walking away, if you will, from the budget deficit problem. So in the short term, I'm not convinced I really care that much what the Fed does in that context. You could argue there's inflation risks on both sides. I just really think that the 10-year bond is really affected by the government spending.
Okay. Speaking of the government, we're getting closer to the conclusion of the shutdown, it seems. Are you expecting volatility around when the data starts being released? Economic data, obviously.
Yeah, not too much. What I'm looking at in the market right now, Diane, is very much like 99% of my attention on quarterly earnings out of the Mag 7. That's what's underpinning the S&P. Like whether, we've had a little bit of a slowdown because government spending has come down. So, the employment picture is a little rougher than it would be. And I don't think the administration is surprised by that. I don't think it'll get into like recessionary territory, so therefore, there'll be some noise, but I'm not sure it'll affect the stock.
And this earnings season was a strong earnings season.
Very strong.
Yeah, I mean, historically speaking, you had so much outperformance overall.
Yeah, I mean, yes, across the boards, and it's not a surprise, right? The big continue to win. Why? In the age of AI, they're getting all the prompt traffic, and that means their models are getting smarter. So if you and I started a financial media, AI website, it wouldn't be as good because we're not going to get as much traffic as all the other ones. So the big win again, so they're going to have a better product. And again, they don't have to hire as many people because coding is one of the things that's gone away. Not gone away, but been reduced with AI. So it's amazing.
It reminds me of the philosophical question that was on my mind because I've talked to one of my colleagues about this because, you get more efficient and it's great for margins. But a big part of this economy, we're still a consumer-based economy here in the U.S., is the consumer, right? And if you have fewer people working, who's going to buy all the stuff?
Right.
So that's a challenge, and maybe I won't ask for an answer to that question. But I'm curious to know your thoughts on rare earths, right? We've got some easing of those restrictions from China. And so that allows the U.S. to, I guess, develop a better footing in that space. You've got MP Materials, which has been an outperformer so far this year. How do you look at the rare earth sector?
Yeah, like we were saying before, right, there's sort of the stage 2 of AI beneficiaries in the stock market, nuclear power, the need for power in general, right? Utilities, and then nuclear as a bipartisan, suddenly, out of nowhere a year ago, both political parties said it was okay to do nuclear power. So that was under Biden, credit to his administration. So rare earths, I put in the same categories because a lot of those trades, Diane, got this huge boost from the Trump administration, right? There's sort of like, there was going to be more demand, but he really did the maximum policies to help, like with rare earths being onshored and things like that. Again, I'd be in profit-taking mode on some of those trends if you were in there. I know no one likes to take taxable gains near the end of the year, but I just feel like some of those companies are light on revenue. I know they don't
Or
dominate
no
the industry.
revenue.
Or
I
no
mean,
revenue.
light on revenue is an understatement, and you know, part of it because the question I have there
It's
is
a family
you know,
show.
Yeah, I know, I understand. But because the thing is, yes, there is this need for more power, and nuclear is something that obviously is being explored. But at the same time, what I hear from expert in that space is that it takes time. You know, I love that you have a 10-year view, especially for nuclear. It takes time, years to build that out and to meet that need. So, you know, maybe with a long runway, we could see more growth. So I can see why you'd be a
But
little
where
nervous.
those people were wrong, and I debated them at the beginning of the year.
Okay.
I don't know who your friends are, but like my colleagues,
Yeah, I'm listening.
is that that's definitely was a risk. But then it became a global trend. People were turning on nuclear reactors across, like from the UK to here, almost every country now. Japan just flipped, you know, which is they're just a couple of years after Fukushima. So it's not just a U.S. world where we had to hold our breath and wait for 5 years. All these projects are being signed up. So that was the good news that ended up developing. But you're right, coming into the year in January, that was a bet.
I want to go back to NVIDIA as a topic. I think back to not the comments that Jensen Huang made about needing more supplies to, you know, make the chips because there's just so much demand. The worries that he said recently, which he walked back a little bit about China and where they sit as a competitive threat. How do you think about it as an investor or, you know, managing billions of dollars?
Well, I mean, the first thing is if you're allocated to the S&P, do I care what Jensen Huang said about China beating us in an AI world? Not a lot. Because if, like a lot of U.S. companies are using Chinese LLMs, like software, they're going to use the best software. I mean, that's to our benefit, and they're open source models. So, do I care that their models are good? No. Now, if I'm an American, right, take my investor hat off, of course, for defense purposes and other reasons, I don't want them to be beating us. And frankly, I think NVIDIA is so far ahead, I'm kind of a little skeptical on the hardware side. But definitely on the software side, it's very competitive.
When you think about 2026, we talked about AI as a theme, and obviously you don't know. No one has a crystal ball. But what are you? How are you approaching thematic allocations for 2026?
Well, like I said, I want to step back on some of the stuff that's been working this year. Definitely would keep U.S. equities, keep gold, and then I think where are some underappreciated sectors, healthcare. And I would look at some of the natural resource companies that are going to be needed for this sort of big capital expenditures that we're doing here in the U.S.
For healthcare, I'm curious to know, because yes, it has been, there's been conversations about like it has room to run. At the same time, there's risks. The Trump administration has come after so many, different companies essentially with, not necessarily identifying companies by name, but we want to bring down prices here. It's great for the consumer, but for the companies, it starts to put pressure on their margins. And then coming after companies that, will be tied to the ACA Affordable Care Act. And then, you see they've had a lot of dings. What makes you, not too worried about that?
I mean, I think, when you look out over the next 20 or 30 years, I think there's no doubt, well, in my mind, the sector that needs AI the most is the healthcare sector, right? So 20 years ago, my medical records weren't even digitized, right? Forgetting what software and AI processing, they weren't even in the same computer. I went to the doctor a week ago, and they still had to look at two systems to see if I needed a tetanus shot. So I can't wait for that whole, I think there's going to be a lot of losers, to your point, but I think there's going to be a lot of winners as well. So definitely a diversified approach. But I feel like some of the stocks, like United Healthcare, have been so beaten up that the contrarian me says, yes, I get the political risk, but I think for a longer term perspective, I want to have some assets in that area.
Okay. And then where do you see the biggest opportunity for 2026 and the biggest risks?
For us, mainly, we just always want to be invested in the markets, right? So the biggest risk would be if the Fed slams the brakes. That's really unlikely, right? Or you get to valuations, to your earlier question, that are just really unsustainable. I don't feel like we're there yet. So I think keep your stocks, keep your gold. And fixed income is I think it's going to be fine too. You're just really going to earn the yield on your fixed.
I was going to ask about fixed income. So it's more of just a protection.
Yeah, if you look over the last several decades, which I did, you really don't make a lot of money on bond appreciation unless interest rates go to the floor, which we don't want. So you're going to make whatever the yield is, 5, 6, 7%. I actually like. It's a little controversial area, but business development companies.
Oh, the BDCs.
Yeah, because they're sort of like alternative credit, but they're in liquid form. So now they will trade at a premium and a discount, so you kind of got to know what you're doing. But I'm willing to. I think the economy is good enough. I'm willing to take credit risk.
What's been the biggest surprise to you this year in markets? Was it the tariffs? We haven't talked about tariffs at all.
Yeah.
I mean, the Band-Aid is back on, if you will, because it was the rip the Band-Aid off, Band-Aid's back on.
I mean, we're going to get a lot more political headlines going forward. Sorry, I know this is a backward look. Right, I think the Supreme Court might rule against the president on tariffs. The midterms are going to start gumming up the works. So I wouldn't expect a lot of support. I think the Fed will be a bouncing ball on cuts. I mean, we do have some residual inflation, so I don't think that's going to be an easy decision for people. But looking backwards, I think the AI second wave trade, like nuclear, that just shocked me.
Okay.
That there's suddenly the whole world is like piling into this electricity play.
All right, Jan, thank you so much. We really appreciate your time, your insight, reflection on the year, and vision for the road ahead. Thank you. That's Jan Van Eck, CEO of Van Eck Funds. Our thanks to Jan for joining us here on Market Overtime. That does it for us here. But remember, you can find all of our Market Overtime episodes on YouTube. Subscribe to our channel and never miss an episode. Be sure to tune in to schwabnetwork.com for all your market news. I'm Diane King Hall. Thank you for joining us. Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. Coming up on noon Eastern here at the New York Stock Exchange, and stocks are sliding again today as investors continue to take risk off the table. Let me give you a check of your scorecard. We are still looking at pressure on the S&P 500. It is down by more than 0.5%. In general, though, we're off of some of those lows because you're looking at small caps a little bit higher, better by more than 0.1%. Circling back to the Dow, blue chips down by just about 1%. Similar percent price action in the NASDAQ 100, off by just shy of 1% as we reach the lunch hour on Wall Street. Here's the roadmap for today's show.
Do that in New York? Like, what would developers need in the next administration in order to do that, apart from zoning changes? Like, what would they need to hear from City Hall that says, you guys can go ahead and build more housing?
Well, we would need zoning changes. We would need the ability to build housing that is affordable to build. You can't add on all of these issues.
Yeah.
Listen, I come from a union family, so I love, unionized workforces. But if you're going to force every small apartment builder to build using union labor, you're going to drive up the cost. If we're going to force buildings to not be able to use certain types of natural gas appliances, or they got to meet certain environmental
These are all
standards.
issues that New York City has faced and builders have faced here.
And so they keep adding all of these things on, and it makes the projects unaffordable. And if they're unaffordable, they don't get built.
I have like 5 more questions.
It's not that hard.
We have 70 seconds.
No, I know. We don't have a long time. Just one last question, because I've got it. We're Bloomberg. We do have a last Fed meeting come December. What are you expecting? What do you think we do need? Based on, you sound pretty upbeat.
Look,
Just got about 40 seconds here.
The Fed's got a tough job ahead of them. On the one hand, unemployment and the employment structure in the economy is giving some mixed signals.
Yeah.
Larger businesses may be hiring, smaller businesses may be laying off. That could be temporary. I'm in that camp. I do believe that the smaller businesses are going to catch up soon. I do think there is. I don't think there's a lot of inflation built into the economy. I think the tariffs are sort of skewing some of those numbers. I think they're going to have a tough call. My hope would be that they continue on the path and they cut rates another 25 basis points in December.
Well, just another excuse for Frank to come and hang out with us again.
And get to the
around
other 5 questions.
December
that we had
10th
here.
Fed Day, when we get that decision from Jay Powell and the Federal Reserve.
You're just up the street, so come back soon.
Will do.
Frank Sorrentino, Chairman and Chief Executive Officer of Connect One Bank, joining us right here in our Bloomberg Interactive Brokers studio. All right, folks, coming up next, what are we going to get into?
We're talking about leadership and why somebody like Elon Musk is a good leader despite not having the qualities that many attribute to good leaders.
Interesting.
That spinning wheel of investments continues here, but you would think it would be a little bit more positive for the stocks, but it's not. I think investors have become used to these announcements now, where it's not that big of a deal. And we've seen some of these Mag 7 names that continue to announce these partnerships. It's not actually spurring the stock higher. So maybe valuation-wise, we're getting a little bit, not frothy, but maybe fully valued at this point.
Okay, great take there. Holly Newman-Croft, who I was talking to Jay of Neuberger Berman, had some similar thoughts to you, Tom, especially as it relates to the differences now in these type of companies and, how solid their balance sheets are. I don't know. I can't call it right now in terms of this downgrade here. Kevin, what's your take?
Well, Diane, let's talk about analysts. Analysts do things that make me scratch my head. They didn't downgrade Amazon at 258 after earnings. They didn't downgrade Microsoft at 550. They wait till they're down 10, 15, 20%. Then they downgrade them. Remember, these are all the same group of individuals that were downgrading stocks in April, are downgrading them now. And there is right now what we're experiencing in the market, in my opinion, is peak bubble anxiety. Everyone's afraid that if they don't call a bubble, that if the market backs off, I don't think they have any idea what inning we're in this AI cycle. And look at the deals that keep getting announced on a daily basis. It's big money. It's betting on the incredible future of AI. And I think there's massive skeptics out there, Diane. And this is why I find analysts so frustrating, because they just chase, right? And Microsoft has been correcting. So has Amazon, down from the highs down here. And now they downgraded. It's just, Tom said it's unbelievable. You know why? Because it's not believable what they're doing. It's just hard for me to sit and look at these analyst calls here and acknowledge that's made on good basis, because these companies, Microsoft, they're in everything. And you know what? They're in everything early. Amazon, they are on the forefront of every major business going on in this country right now. It's just a head scratcher. But it doesn't really surprise me, Diane.
Okay, I'm glad you brought up the bubble conversation, if you will, because you got the bubble fears bubbling back up based on the latest Bank of America fund manager survey. What's interesting to me, the title this year, Cash Poor, I think this is pretty accurate. Cash Poor, CapEx Rich, Rate Cut Needy. This is talking about investors, right? Meanwhile, you've got somewhat divergent analyst views on Oracle and NVIDIA. At the surface, Stifel more bullish on NVIDIA today, raising their price target. Baird, though ratcheting down its price target on Oracle, doesn't mean they're not bullish on Oracle, but the pullback on the price target. Tom, what's your take, especially when you think about the fund manager survey and, you know, I guess maybe some of the risks that are on the horizon right now?
Just what they are. Their opinions, their surveys, Diane. It's not going to equate to much. You know, a stock pricing is based on what's going to happen in the future. You know, you look at that Oracle as an example, the $300 billion partnership that they have with OpenAI. You know, that's going to take years to come to fruition. And will that fully be spent at this point for the build out of their AI infrastructure? That's another thing you have to start wondering about. And then you start seeing, when the market flips over a little bit, you start seeing these surveys, everybody starts to feel a little bit more dour on this. You start hearing headlines about the AI bubble. Will that come to fruition? Well, there might be bubbles in parts of AI, right? But maybe not overall. This is a game-changing type of technology that's moving forward. We haven't seen the full impact of it yet. Bank of America, they said 45% of investors named AI as a bubble, as a top risk. That's up sharply from their previous survey. They didn't mention yields that much. Only 17% were concerned about yields. We know that the expectations for a Fed rate cut coming in December have come down under the 50% level at this point, according to the CME FedWatch tool. NVIDIA got a price target ahead of their earnings event on Wednesday. That's going to be a big one. I've mentioned this over the last week, how big of an impact due to the size of NVIDIA within the three major indices and how much a big component it is of those major indices. So there's going to be some concerns. NVIDIA is down another nearly 2% today after falling nearly 2% yesterday. We're pulling back down about 14% so far from those all-time highs. Oracle stock has pulled back 37% from its recent all-time highs it saw just about 2 months ago. So it's in bear market territory. It's right at its 200-day moving average. It hasn't been down below there since late April. We're seeing some people probably taking some money off the table, but those stocks have had spectacular runs. Oracle, even with the 37% pullback, that stock's still up 30% so far in 2025, and that's not even including the gains that we saw in 2024. So, yeah, maybe some astute investors at this point, but valuations have been getting elevated, Diane.
Okay, great point. Kev, what's your take?
I think there's a fever going through all the people that are trading these AI stocks, and the prescription is NVIDIA's earnings tomorrow. And I think NVIDIA's earnings tomorrow, remember, if you're looking for hesitation, it's coming from analysts, it's coming from everyone except the leaders of these companies. Jensen Huang he's not wavered one word, not one syllable about any weakness or decelerating growth in his company. I think tomorrow's going to be a massive day for the market. Do I know for sure? No, of course I don't. But there's so many stocks. I was trying to count all the stocks. I stopped at 20 different stocks, all high-profile names that have market maker moves for tomorrow because of an expected move based on NVIDIA's earnings. I think this is the key to the rest of the week is NVIDIA's earnings. And Oracle, you look at that chart, it was up, $100 the day of its earnings, and I don't think it's upticked since, Diane. And now it's approaching its 200-day moving average at $209. It's about $8 lower, but you wouldn't think it could ever come close to that number again. And there it is, getting close to its 200-day moving average. So incredible price moves, but there's just, right now, it's just doubt and skepticism about the ability of these companies to deliver on AI. I agree. There's going to be winners and losers. That we know for sure. But the fears about the bubble, it's just incredible, and it's taken over the market right now in terms of fear in terms of these valuations, Diane.
Like the pendulum has swung. Let's talk a little bit about something that, it appears to be fixed now, but shares still taking a hit. Cloudflare under some pressure. It's essentially around the plumbing of sites that we're off and on. I'm on Twitter X right now. The CTO, the chief tech officer, issuing a mea culpa there, saying he won't mince words. Earlier today, they, quote, failed our customers and the broader internet when a problem in Cloudflare network impacted large amounts of traffic that rely on Cloudflare. The stock down 2.5% right now. Think sites like Twitter X, ChatGPT, Claude, Spotify. Tom, what's your take on this one?
Well, you've seen the stock bounce about $10 off of those session lows here, still down at over 2.5%. But this is kind of indicative of what's going on in networking, right? These sites and the reliance that they have on some of these networking companies like Cloudflare, where it can put off. I mean, a bunch of sites that I typically use when doing some research were down today, including X. ChatGPT was down. So this is going to have a pretty widespread impact. They did come out and state it wasn't a hack, a security hack, which is a positive probably, and why you're seeing the stock rebound here a little bit. But I think it just goes to show you that, the interwebs behind everything that people are digesting on a minute-by-minute or day-by-day basis are susceptible. In cybersecurity, that's why people kind of pound the table on cybersecurity moving forward, that, that's going to continue to ramp up. The need for it in case this was a hack. The company said it wasn't, but at the same time, susceptible. And that's probably a problem. And maybe some of these companies are going to have to start rethinking who they partner with and who they're using for their networking to get their sites out there.
Good point. Kev, I don't know if it was a similar situation over there at the CBOE as it was at the NYSE this morning. I heard a bunch of guys on the floor trying to problem solve and troubleshoot, and then, quickly realizing it wasn't their problem, it's the problem with Cloudflare. Was it something similar there?
I didn't hear anything widespread here, but you certainly don't have to look very far to figure out where the problems were. And it reminds me of the CrowdStrike issue. Whether it was related or not, what you learn from these outages is the massive footprint that they have. It was social media, like Tom just mentioned. It was retail. It was transportation. The New York Metropolitan Transportation went down, Diane. I mean, you realize when these companies go down how many things they are involved in. And I don't know if it's good for these companies or concerning for the general public, but yeah, that was a pretty big outage. When something like X goes down, it's significant.
Yeah, so things are just more tied together than we realize now. It just feels like the plumbing that we can't see it quietly impacts everything. Let's talk a little bit about the retail sector. This is a big week for retail. We got Home Depot out with its results this morning. It was a mixed bag. They missed on earnings, getting a haircut today. They warned about a cautious consumer. That's coming kind of back to the forefront. We talked about that earlier this year, a cautious consumer. I wonder if we're going to hear more about that with retail earnings this week. Tom, what's your take?
Yeah, they highlighted a couple of things. You know what? I think the guidance that this company has given over the past several quarters has been, hey, it's going to pick up. It's going to pick up. It's going to start improving. Well, it's not. And that's reflective of their guidance. They cut full-year profit forecasts. They missed, revenue or earnings expectations. Then they outlined basically that comparable same-store sales are going to be lower than they anticipated. Still slightly positive, but lower than the 1.5% that they predicted. And if you look at some of the commentary from the company, he said that home improvement activity would increase, that they'd expect more traffic to start coming in. That's not coming to fruition. They cited storms, a lack of storms, being an issue for them, where they didn't get any pickup from any of those as far as hurricanes goes and some other storms. So, this kind of sets that tone where the stock's at 7-month lows, and maybe it should be, because they're not seeing the turnaround that they anticipated, the higher interest rate environment at this point, with 30-year fixed mortgages still above 6.3%. It makes consumers, pull back any big spending that they might do as far as home improvement goes, whether it's fixing up their bathroom or fixing up, their kitchens or something along those lines. They keep pushing that out further and further. And I think the market's finally getting this right, because remember, after this earnings event a year ago during this quarter, the stock hit all-time highs, and it's been on a downward trend since. And maybe it should be at this point, Diane, because everything that the company stated it was going to happen is not happening at the pace that they anticipated at this point. And that's why you're seeing, the stock at levels that we haven't seen since April.
Yeah, I'm sure Home Depot is looking forward to flipping the page to 2026 and hoping there will be some tailwinds from the housing market. Kev, your take?
What a crazy world we live in, Diane, where the worst news they had was no storms, no significant storms to report, that they would have plywood and and power generation and roofing. That hurt their sales, the fact that there were no storms during the period. Then the rest of the story is indicative of the housing market, which is the housing market needs more affordability and lower interest rates. If you want a obvious reason to have lower interest rates, it's because of what's going on in housing. And housing repair needs lower interest rates, and these earnings, Home Depot is a well-run company. Remember, despite all their problems, revenue up 2.8% year over year. Still good numbers. This company still manages itself extremely well. They're a very healthy balance sheet, very healthy company, but you can't help but wait for housing to pick up. The Home Depot will be one of the key beneficiaries. Diane?
All right. Well, right now, today, investors are selling first, ask questions later. All right, guys, we'll put a pin in it. We've got bull versus bear coming up. The guys will get their example trades put together for Lowe's. It is actually being dinged a bit today off the back of these results from Home Depot. We'll have more Fast Market after this break.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
A major company. And none of them have the same characteristics at all. Malala does not produce results in the same way as a military commander, but people follow and will go very far in both cases, right, to support that cause. The second is, and this is kind of a wilder thing that people don't really notice, is that no matter how successful people are, they tend not to feel like they fit in or belong, because the CEO knows that they've had 3 great quarters, but if the next 2 are off, they might be out of a job. Yeah. And the Olympian knows that maybe they won at the last Olympics, but who knows if they'll even qualify at the next one, and then no one will care. And so no matter what, there's this absolute factor that people feel a great desire to want to fit in and belong, which brings me to my real desire to understand is clearly those leadership traits didn't matter. And if there's such a great desire to belong, it's because human beings tend to be best with each other. So let's try and understand at our core what will allow us to be best with each other. And that's what the book explores, which is what are the characteristics that makes teams smarter than the sum of their parts?
Okay, so why, if that is our driving force, when I look at Congress, and I know you layer politics on things and things change, but if we are better...
They cannot be studied.
If we are better as a group and a community, and yes, indeed, right, they have to vote on things, and so when they work together, things can actually move forward, or at least move. Why does that not work its way out?
So that's, I think, a great question, and I want to be very clear. I don't study politics. I'm not an expert
No,
on it.
and full disclosure, like you lay politics on everything, and it can be a little bit different.
I'm under the impression that things changed, and this is what I've been told, after Newt Gingrich was in Congress, because he really pushed for less cooperation and also for people to spend more time in their home districts. Now, when that occurs, then we have something called the mere exposure effect. The mere exposure effect is simply, here's the funny thing. Have you ever, what would you consider the greatest painting of all time?
Well, people will say Mona Lisa.
Exactly. Do you know why?
Isn't it the perfectly symmetrical
That's what they'll tell
face?
you, but that's frankly not true. In 1911, a man walked into the Louvre on a Monday while it was closed. The Louvre was protected by 11 mostly drunk legionnaires, and walked into the Renaissance section, ripped the smallest painting he could off the wall, took it out of its frame, and then wrapped it in a workman's smock and walked out.
That was the Mona Lisa, wasn't it?
Yeah.
Yeah.
Newspapers around the world spread images of it, and that's the first time almost anybody had ever heard of it. It was not considered a great painting. 3 years later, it was returned. Once again, newspapers around the world rejoiced. And it was a way to, it was the build-up to World War I, so it was a way to make fun of the French government and its incompetence at the time. Now, human beings tend to like and trust the things that they're familiar with. And when you see the person who might be across the aisle picking up kids at school, and your kids are in the same class, and you're at the same birthday parties, and you develop familiarity and trust and all these other factors outside of that voting room, then suddenly you tend to treat people with more humanity and have a greater ability to work with them. And so, much like the Mona Lisa is not really a great painting if you actually speak to historians, the lack of that mere exposure and the trust that develops from interacting outside of these traditional negotiations, we've lost a lot of that.
Well, and we always bring up Alan Greenspan saying years ago about how when he was in Washington, people, actually Democrats, Republicans, went to cocktail parties together. And so, you know, you have a glass of wine with somebody and you kind of relate. You're much more relatable, if you will. John, this was really, really fun. Hopefully we can catch up again in the future.
I'd be honored.
Good
Thank
luck
you for
with the
having
book.
me.
Yeah, John Levy. He's a behavioral scientist, New York Times bestselling author. His new book is Team Intelligence, How Brilliant Leaders Unlock Collective Genius, joining us right here in studio.
Were you invited to one of the secret dinners ever?
It's secret, so I can't tell.
Oh, okay.
John.
Yeah, same. Same. Hey, let's take a look at how things closed out the day today for the equity markets on this day when NVIDIA reports tomorrow. That's what we'll be talking about 24 hours from now. The S&P 500 fell 0.8%. The NASDAQ composite down 1.2%. The Dow down just about 1.1%.
Carol Master along with Tim Stanovic. Let's get to some stocks on the move on this Tuesday. With us is Bloomberg News cross-asset reporter Denitsa Sikova. Got to talk about two of the hyperscalers. We're talking about Microsoft and Amazon.
Yeah, just one day before NVIDIA's earnings, we're seeing Microsoft down 2.7% and Amazon down more than 4%. The ticker is AMZN. Of course, part of it was a downgrade. We saw the rating cut from buy to neutral. This is, of course, happening at Redburn. And we saw quite a reaction there. We saw a lot of announcements about more AI spending later in the day. And Microsoft was one of the companies that announced to invest up to $5 billion in Anthropic. But we're seeing concern building up. Obviously, the Nasdaq has been down for some time. They've raised around $1.8 trillion of value since mid-October. So clearly AI spending, there is a lot of worry there. What we're seeing here is that the company is saying the bull case for generative AI is no longer clear and hyperscalers should be approached with caution. It's a pretty harsh warning. They say the industry Gen AI narrative looks increasingly misplaced. It's very rare to place a neutral rating on Microsoft and Amazon, and 90% is a buy. So definitely a cracks in confidence of the big winners of the rally for the last 3 years.
We had Vance Howard of Howard Capital Management on, and he's kind of hoping that NVIDIA throws some cold water, even more so on this AI trade, because he says he's just going to buy up these shares, right? He was all in.
Did you see that Jeff Bezos has started another AI company?
I did see that.
It's already raised billions of dollars.
Yep. It's the
Some of
spend.
it's his own money.
Yeah.
$6 billion AI startup.
Yeah. I mean, listen, the spend
Project
continues.
Prometheus.
Yeah.
Sounds like a Jeff Bezos company.
It does.
I mean that with all due respect. Hey, let's go to Home Depot because they came out with results today.
Yeah, stocks down about 6% today. That was the worst day since February 2023. The ticker is HD. They cut their full year earnings guidance, and they're warning that unsteady consumers are hitting the pause button on big ticket home purchases. Of course, the housing market has been somewhat frozen, so that has been weighing on the company. Add to that tariffs, a lot of the materials are more expensive, a lot of confusion, supply chain issues. So that has been weighing on the stock. That's already down 11% year to date. The retailer said it expects adjusted earnings per share to decline 5% from a year ago. The company said its profit and comparable sales came in lower than expected in the last quarter. So a lot of pressure for a company that has been under macro and other uncertainty already, and another earnings report that didn't alleviate concerns.
What's a big ticket item at Home Depot that you consider?
I bought a leaf blower.
That's not so big ticket,
That's not
buddy.
a big ticket. That's a.
What's
but
a
you
big
know,
ticket?
they're working with like do it yourself kind of. That's helping. What's a big ticket?
I used to love going in.
I don't know,
Home
a
Depot.
fridge? That'd be a big ticket.
Yeah, I
item,
guess so, an appliance.
Yeah.
Well, Lowe's before market on Wednesday, so we'll get an idea of whether or not this was a Home Depot specific story, or if Lowe's takes a hit too. Very briefly, Honeywell.
Just quick.
Shares of the aerospace automation technology are down more than 2% today. It comes off a double downgrade from Bank of America from buy to sell. A lot of pressure there. The company is down 10% year to date. This is the only sale rating, but clearly a lot of pressure from a double downgrade.
Yeah.
They don't come often.
Down 10% year to date. All right, Bloomberg News cross-asset reporter Denitsa Sukova. Check out our Stock Movers podcast. 5-minute episodes of the biggest winners and losers in the stock market. Find it on Apple, Spotify, or anywhere you get your podcast. Tuesday. Busy day. Have a good and safe evening, everybody. Yes, we are done. We'll see you tomorrow. Bounce of Power.
Doesn't believe that is going to happen. So it's a bit of a canary in the coal mine, if you will, right now.
Okay, so it's down from 150. Does that qualify as a candidate for bottom fishing or no?
At $50, you can hate me.
I don't own it. I don't hate you. You got to give us the truth.
They might. Yeah. I mean, you gotta wait for this drop. So $50 comes from just taking this bounce. If it breaks down, shit, that's 20. Like, no way.
The IPO was 40, right, guys? So,
I mean, the IPO was 40. The IPO high I have here is 65. I have 50 as 50% of this move right here, and a full doubling of that move is right here. Albeit this is pretty wicky. You just have to, we could take this one move at a time. And if I just took this one move at a time, this is still saying like 65s. Low 65s.
The thing about this one is if Iran and Nebius hold their weight and CoreWeave dumps, that's how you know the street is giving up on this one and they're preferring the other data. Even though this one has better metrics than those two from a backlog perspective, but they don't have the type of debt profile that CoreWeave has.
It's the debt. It's 100% the debt.
No.
Yeah, I think as close to 60 as you can. And this is a low float still, I believe. There's a bit of I hate to say 50.
It's like Nebius has debt, Iran has debt, but they don't have the type of debt but they also don't have the type of growth technically. But it's almost like it's a catch-22 because the street doesn't like that. It's coming from the debt.
Yeah.
I mean, this is NVIDIA's largest holding. They own $4 billion of this company.
Well, I mean, at what price though, I guess is the thing. And
it's just like the fact that NVIDIA is like trying to backstop them, right? And the street still is like, no, we don't care. It is incredible.
I mean, this is turning out to be like a BMNR also, where it's like, you can think that there's a good price anywhere, but at a certain point, you have to like just chill and let the buyers step in and not worry about getting the lowest price possible, right? Like if I were to start buying CoreWeave, personally, I would be happy buying it higher I would rather buy it higher than lower and not worry about bottom fishing, because yeah, this is mixing trading and investing, because I want to see like a good investor base step in before I try to snipe a low, right? As an investor and a trader, my job in either of these is not to snipe the lows. It's not to get the lowest cost basis possible. That's not my job. In both scenarios, as a trader and an investor, my job is exclusively to extract as much freaking money as humanly possible from the stock market. That's our job in all scenarios. And that can't really be mixed, right? Like that is universally true. And it's not to bottom fish either. So I do have to identify good companies with good growth, with good cash flow, things like that. This may be that from a fundamental perspective, to each your own, I don't know. But that said, I have to make sure I get it I have to try to get this at the right time also. Or, I do it once and I just let it be. And I don't worry about continually DCAing into this, because I make my purchase and then I just wait for the rest of the market to come around to my viewpoint.
Right.
And when they do, then I'll go ahead and buy more.
Ethereum.
Sorry, that's just my 2 cents. You guys don't have to agree with me. It's just like my logic.
Yeah, we could do BM&R after Ethereum. And because Ethereum did have a little bit of reversal, we have one question here of, can you ask Jason how to show us how to spot a reversal? If you think there is any reversal from 29 to 32.
I mean, if you timestamp that Tesla thing I just showed you guys, that's perfect. Like that's why I did that, right? When we go from full bearish to actually finally going, timestamp that Tesla, that's a reversal setup. And I think that's easy for investors to look at. But it always starts with the 20-day simple moving average from a long-term perspective. So what am I doing on Ethereum? Just the status update.
Leading into BM&R, your thoughts on that stuff?
So I said 2800s. I think I'm going to stick with that. Quite frankly, it's potentially lower, but I don't think, like, if you're in something like a Robinhood or something like that, I don't think you're going to get filled lower than that. This is like that meta setup right now where you're at, so this here, what this is from this high, it's this low to this high, and it's a 50% retracement, right? Also shoot. I don't know if we can do it later, but
what?
How to spot reversals. I'd have to pull up like training decks and things like that. It's a price action thing. We're going to release the beginning of School of Gains, like the foundational stuff, like pretty soon, I think at the end of the month. So
let me just, this is Jason's links. If you guys want more of Jason's stuff on Twitter, he has a lot more stuff if you want to go deeper with him in terms of TA. So please make sure to click on his links in his Twitter right here.
So right now, from a retracement perspective, we're very much at a meta like spot on Ethereum. So from the extreme low to extreme high, extreme low being 1,200 and change, something like that, and extreme high being nearly 5,000. We're literally at the halfway point. It's an okay spot, but it's not the end all be all. Okay means okay. Okay does not mean good. If we cannot get, and that okay spot, by the way, is $3,166.10, not to be exact or anything. But if we cannot get over that, what is true is that you have an extremely high probability of getting to $2,628.93. Again, not to be exact, over a fairly short period of time. And about 2,800 is what I said last time. This is a statistical probability. If you cannot get back over that 3160, call it 3170 for round numbers, then you will, this is that self-fulfilling fib thing. You will see that 618, which is about 2750. And for me, I'll tell you, you'll probably see 665, right? Which is about 26. And you're going to retest this general area. If you're in a real exchange and you might have like real orders out there, it might be 25. But again, crypto is the epitome of supply and demand. It is supply and demand in its rawest form, and flash crashes are very real. When these things happen, if they happen, I don't know that they're going to happen, but if they do, gas fees are going to be insane. And you may actually have an order that goes through and the gas fee might cost you a full ETH. Who knows, right? Because that also is Ethereum. just as an aside. But that said, I think this is going to be that actual spot that you do want to. This is it, right? And so this. In this general area, my friends, is a legitimate discount. That is a legitimate discount.
This is the first time you said that on ETH so far.
Yeah, that is a legitimate discount. Now, is that a reversal? No, not really. Is it a discount? Yes. What you need to see is from a reversal perspective is if you go back to that Tesla timestamp, your 20-day SMA is going to come down like this. Eventually price is going to come over, and eventually price is going to reclaim that 20-day. Your 50-day is going to be like this. Your 200-day is going to be like that. You're going to get a big old bounce all the way back to whence we came, and it's going to get rejected, and it's going to be a process to come back, and it's going to probably defend that 50-day simple moving average, right? And that 50-day is going to be like this, and that 20-day is going to be curling. And then they're all going to come and they're going to intersect, and your price is going to be like boop and boop. And we're going to be talking about this 36 and change level for a while. And this 36 and change level is going to be the same exact level that I'm going to tell you is going to be the pivot of your big reversal. But here in this area, it will be a discount for sure. Will it be the lows? Very possible. But will it be a full-blown reversal? That's the difference between a full-blown reversal. And if we zoom out and we look at this on a larger, let's call it weekly scale, if that were to happen, right? Here's ETH. Sorry, I'm going over a little bit. When you look at this for just a minute and you think about what this could actually look like, if that were to come down and say a little something like this, and do a little something like this, and then a little something like that. Guys, is that not a normal chart to you? That looks like a freaking normal chart to me.
A very normal chart.
So, all that to say what I said. It's just, anyways.
Okay, so then that leads us to BMNR. Are you thinking BMNR is at a reasonable discount at 32 and change?
Probably, but again, I still need to see what I need to see. And that is structure show up. So, you know, the crazy thing here is that it is at my level. It is at my level. But I'm very hesitant to, what the hell? What's happened to my charts? So we got the breakdown, which is quite unfortunate. We're testing these lows. This was my level 33, breached the level, comes back over and sitting on my level. This is the beginnings of what structure could look like. You know, if I look at this objectively, not objectively, but like legitimately, and I say, all right, well, if this can extend, so an extension, $30 was that first extension. I could see 27. I really could. And oddly enough, it actually is exactly that little wick down below. But I mean, the one thing that's kind of funky about BMNR is, like, to be fair, like this chart goes into no man's land after that. So it's like, I really don't know, because it is in such no man's land beyond that. And I have to do as if we were doing all-time highs, and I just have to use extensions on fibs. I'm just going in the reverse direction, which is what this is. So $30.55 was an extension. If it cannot hold that level, it's $27.71. But again, here now, because this can go kind of wherever it wants to go, I have to like chill. And I have to say, hey, look, if I bought it at $40 and then I bought it at, say I bought it here and I bought it wherever I bought it, like here, right? I have a cost basis of like 49 some dollars, right? 39 some dollars. I could buy it here, which gives me a cost basis of, I don't know, $35. That's not going to do me any favors if it just continues to go lower, is what I'm looking at. And I don't want to put good money after bad. I'd rather wait for this flush to, if that's going to happen, and then I'd rather wait for structure to show up. And it might be here later, but I want to wait for this to happen, and then I'll buy it if I see something like that. It was a weird pattern. And I know that it's actually starting to come up, because if I buy it here later after this kind of flush has begun, then I know I can add here and it's about to get back to my cost basis, and I'm quickly back in the green, and I'm not really throwing good money after bad in that case. So that's why it's important for me on BMNR to see structure show up, because I don't want to just be throwing, otherwise it could take a really long time. And again, with trading money, I have to consider opportunity cost as well. Investing money, not so much, right? And it's more about allocation percentage from that perspective.
Okay.
But that's where I'm at. It looks okay, but it can be lower.
Can we look at Oracle? I mean, I know there's some fundamental issues here, but is this at all exciting to you at 220, 215,
No.
220?
Oracle has never been exciting to me, Bella.
Not even after a 35% decline?
I don't like Oracle just in general, but wow, no, this looks dangerous. Are you talking about short or long? Wait a second. What are we talking about? What?
Talking about buying the dip. Would you buy the 350 to 210 dip?
On Oracle?
Yeah.
No, I would think that this is one of those stocks that would be at risk. I would think that this one, along with, I mean, first of all, this one's already showing the majority of signs of weakness. It's at the 200. So again, this one has already done what's interesting here is that this has already done what it looks like some charts are like this actually here now, where it's already done the losing of the 20-day. It's already done the losing of the 50-day, right? And it's already made the entire trek down towards the 200-day, which, by the way, this trek is usually pretty quick, and it was pretty quick. This is a typical movement, and usually when this happens, this piece takes a bit of getting its legs underneath itself, and this white line here, remember, that's my 20-day, and it always starts with the 20-day. So this 20-day will catch up to the 200-day. It's what's going to happen, and when this happens, that's when you'll be all right. And by that time, the 50-day will be over here, and this move will take you to the 50-day, which will get rejected. and then your 20-day will be catching up, and then your 200-day will be catching up. And if price continues, then all of these things will be very tight, and then you'll be talking about an actual reversal. But to the person that was asking what a reversal really looks like, that right there is how it actually plays out. It's not usually a V-shaped recovery. I think people get spoiled with a lot of the V-shaped recoveries that we've had recently. That's not typical. What I just kind of drew out randomly is more typical. And it looks a little something like this, just like this.
Okay.
There's one I just saw on AMD. I was looking at, a little something like this, where you get up, you get hit, it comes back down, chop, 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 but eventually you're back.
Duolingo, any thoughts on this one?
Well, let's go.
You got people finally thinking this is the bottom, but I don't know.
What did we say?
Did we? I don't know. Did we analyze Duolingo before? We did.
Yeah. We did. Oh no, I said 120.
Oh, okay. I don't know if that's 120,
I'm 120. Because if this, I have 120, honey. I'm sorry. Like, because if this is the thing, then the breakdown, it's like one of those weird patterns where, like, if it actually goes, then the reason why people like this head and shoulders pattern so much is because it has like an 80% probability of hitting its entire target, which in this instance is here is the whole thing. Its entire target is 50% of that, which is about 120. I think is how we have this. This is from here. I mean, if I get you, it's still about 120s. No. No, it's not ready. This next move, no. Why would they? No. No, I can't. No, because this is, no, dude. Who said that it was? No.
What do you mean? Who? Everyone on Twitter is freaking like Duolingo. This is the bottom. This is the bottom.
There's no part of this chart that looks like it's
down from 570. So I think people just want to believe.
They want to believe.
Done. You know.
Yeah. Well, I mean, they wanted to believe in a lot of things too. I mean, it's slowly. I need to see that higher high and higher low, just at least on a daily. I don't even have a higher daily high. I don't even have a higher low. Damn.
Yeah, there's like no one coming in to stay. Like no one gives a
sorry, dude. I will try, but I cannot tell a lie.
Okay,
grab. Hold it in, actually. Why did my order not get filled? Really?
What price? You did 540?
20.
520? Oh no, we didn't touch 520 today. We got like 528 at the lows.
I have it working good to cancel. Or I mean extended hours too. What is that? 22? Oh my god. Every time. Are you joking right now?
That's hilarious.
It's not, actually.
Why are you being so nitpicky about 5 cents, dude? Like,
this is what I do.
You're talking about me in the bottom.
What an idiot. Oh, wow. What a loser, dude.
All right, we going up or we going down? What's happening?
I've said 520 multiple times on the show as like, this is the area. This is the general area. Again, we still honestly want to see structure show up, but this is the price of interest. So this big white line I just threw straight across, it's an important area. So this was resistance. This is constructive. So resistance here, support here, resistance here. This is the point where it actually broke out right here. Why it was 520. What a loser.
Yeah. Oh, you're right.
I can't believe it. I mean, this was a very strategic price order that I put in, dude. I wasn't messing around. Like, what the wow. Like all the way back to, wow, I can't believe it.
I mean, it might get back, dude. We get another 1% down in the S&P. It'll happen.
It might get back down. I'm just going to have to chase it, dude. I do this to myself all the time. I'm just over precision is such a killer, man. Like, because I'm like,
the dopamine you must get from being precise on certain entries must be amazing as a technician.
It sometimes it's this. It's like
I've done a couple of day trades, nothing like you, and like when you time it right and you make a profit, you feel like you're on top of the world. Because people spend time in their day working and you just press a couple buttons and you go in and you go out and then boom, you made profit. Like that's not easy to do. I have a lot of respect.
Wait, calling a bottom is one thing. Calling a top is another thing. Calling an entire bottom to top, like pinpoint to pinpoint, is
not easy.
Yeah, that whole thing is like whoo. Because then you're actually dealing with emotions too. Because like human beings are greedy bastards, dude. I'll tell you what. And you just want to stay longer, and you overstay your welcome. That's the hardest part right there.
That's also why a lot of people suck at trading, because like, it really is hard consistently to make profits.
Yeah.
Even on a weekly or monthly basis, you know.
Yeah. I'm excited for this School of Gains to drop. Actually, I've seen some of the edits so far. They look pretty good. Like, I think it's going to help a lot of people.
You're using the new studio, right? Too. No,
actually, we're using this for the most part. That's why I'm wearing the same thing like every day, because my partner's like, dude, you gotta keep it consistent. And I'm like, wear the same clothes every day right now. Like, really? All right.
So 520, that's your level on this one.
Apparently it's 522. I mean, just this general area. Can it go lower? For sure. But right around here, accumulation time. As close to 5 as you can, but obviously over precision is a killer also. You like the stock, this is where you start nibbling. End of story.
Okay, Google, you touched on it for a little, but any thoughts on the breakdown?
I mean, oddly, okay, so Google, it's overextended, but there is zero structure broken here. What I will say is that, so here's earnings right here. The way that I have a system of like, okay, not a system, but like there's a setup that we know is true, is that you usually get one shot to break the highs of a power earnings kind of move. So if this was the big earnings move right here, you usually get one shot to actually make new highs. And Google has had it shot
like 3 or 4 times, right?
Mm-hmm. And it's failed to make new highs.
Literally over the weekend with the Berkshire news, it had another shot.
And so what that means is it doesn't mean anything really bad, but it means it's not going higher. And it does mean that you are at least minimum going into a 45-day hold, right? Literally. And so we are currently in about halfway through 45-day sideways price action. So Google currently is in a perfect spot to start harvesting premium, meaning selling calls and probably puts, but likely just selling calls right now. What I do have, and I would say, what calls is more along the lines of like 200 plus, or sorry, not 200, 300 plus, like 310s for like 45 days out, 300s, the 310s for like 45 plus days out. If you, in this instance, if you lose, it's 280, then in fact, Google's going to pull the full gamut back. But that actually already happened to Google. And that happened right here. So, and it did actually pull the whole thing back, which is, the whole thing is right there. And it pulled the whole thing back and it just took another shot. So this to me, the pullback has happened. It's actually already held the whole thing and it just took another shot. But this third shot, this was a lower high. This was another lower high. And so I think this still chops sideways. Just know that this is very likely, at least a holding pattern, and you're still, frankly, at risk of going with the rest of the market. But it's all going to start with that 20-day simple moving average. So when if it does lose, it's relatively strong now. It doesn't mean it's invulnerable. But if it does lose the 20-day simple, then statistics say it's probably going to go to the 50-day simple, which currently is sitting around 255. That's all that means is a standard pullback, and probably test this general area. But as long as that's staying over the 20-day simple, which is right about 275, this full trend is like absolutely intact. It's just currently not going higher, which right now this is definitively in a holding pattern. At the highs, structure fully intact, like fully intact. So this one is bucking the trend definitively.
Like if you would buy Amazon over Google just because Google's at all-time highs?
No. That's like asking me, you know, Apple is historically like the one that bucks the trend first. But as a trader, I also know Apple is historically the last, Apple is historically just the last general to fall.
Yeah.
It may have changed. I'm not saying that necessarily. We don't know. It's got the best fundamentals on Google right now. I think so. But if it continues to have the best fundamentals, that's fine. The market will do what the market does. This still looks good. A lot of these stocks have good fundamentals. The technicals are just okay here. They're a bit stretched, but it's not. It's holding its own. It doesn't mean there are. The thing is that there are a lot better charts in the market than Google right now.
Yes.
There are just a lot better charts. So if I look across the market, would I rather put net new money in Google, or would I rather put net new money somewhere else? There are a lot of other places that I think that are better to hide out in if you were to, like, say, you know, for lack of a better term, in the market right now.
Yeah.
I mean, even what was it? I saw like Warner Brothers. This is a good stock today. It's not even biotech. Like, that's a big old stake today. I mean, that's good.
It looks like Fairmont wants to give them $70 billion.
Yeah, was that the news on them? But yeah, I mean, there are a lot of good-looking stocks out there. Lily, I think you mentioned like the biotech stuff is still happening. I saw my Merck had like a 5% something move right now. I mean, we talked about this last week. This stuff still looks really good. All this said, though, I will caveat this with, you know, every year this happens, and value looks really good. And I told my group this, you know, every year we come to this, I really wanna root for like my Pfizer's, my, you know, your J&J, which I mean, you don't have to root for J&J. This thing is friggin' all-time highs. But
Horizons,
you know. Yeah, your value, your deep value. And what ends up happening is that these will do good for a while. They really will. And then at a certain point, growth, big tech and the like end up catching a bid one more time, right?
Because people want growth at the end of the day.
Because people are greedy and they want the returns of growth. And the returns of growth, the truth is, are just much better. Right? They really are. And they end up selling their value for growth. And so these do good for a time. And I love this Merck chart.
By the way, in 22, Verizon went from 54 to 38. So
dude,
you got to be in the right value names in a bear market too.
Look at this reversal, dude. You don't know this chart. Probably not. This is Regeneron. I sent this in our server. Like, Regeneron, my God. If this chart, crack, turns around, this is something else. First of all, this is the setup that we're looking for. Super tight SMAs, like broadening distance between them. There are very good chart setups in the market today that we're always looking for. They're just not in the same space that you're used to. I'm gonna do a time check. You got 30 minutes right now.
Dude, I got a dip. I actually got a dip.
I got a dippy dip.
I'm just thinking the traffic that's gonna be there. So if you want to stay on for like,
no, I want to get this. I want to get this stuff out, right? This school again stuff. So I got a lot of recording, but Lily, we covered. I think it's good. I think, you know, these are kind of the things. It's Pfizer. I said it's interesting. It's got to get over 26, right? If it can hold over 26, look, this Pfizer chart. This is teeing up very tight SMAs. It's worth a watch. The narrative may have changed, but it has to get over 26 and trend. Then that can be a very, very massive reversal. I mean, like generational reversal. And that's one where this is actually very interesting.
All right. That was kind of interesting. What are we gonna do here? What a bubble. Plus BM&R's special guests. Got a special guest on, that's what's up. This ended badly. Oh man, Akash getting beat up there. Let's go into what's going on here on Perplexity. I know Perplexity provides pretty good information about what's going on in the US markets around finance. So let's quickly just take a look here. So we have Bitcoin volatility and recovery market summary. So Bitcoin plunges below 90,000 overnight, or erasing 2025 gains, but bounces back to 3093 as extreme fear and thin liquidity triggers sharp sell-off. The slide was linked to Death Cross, the 50-day Death Cross, Mt. Gox stuff, but late dip buying are resilient long-term demand and supports partial rebound. Tech and AI drags U.S. indices. So the S&P 500 and Nasdaq each logged their fourth straight daily decline, weighed down by valuation concerns in the major AI resilient stock like Nvidia, Amazon, Microsoft. Google has been doing well because of Warren Buffett's purchase of about 13 million or so. Oh, maybe it was 4 million. Pre-Nvidia earnings coming up. Excited about those numbers as well. Those numbers should be in tomorrow. For a few hours today, Bitcoin and digital assets shares surged as MicroStrategy and Ethereum-focused BitMine immersion outperformed traditional stocks, which was rare given the multi-week trend of crypto underperformance. This bounce came despite ongoing bearish sentiment and didn't signify a sustainable reversal. Home Depot came out with their numbers. Those numbers were not good. The market kind of got beat up. Home purchase has not been very well as well, so that's another reason that it got beat up. Gold stabilized at about 4,080 an ounce. US dollar firms in risk of trade. The dollar held steady as safe haven demand returned and traders recalibrated expectations for Federal Reserve cuts. So as we can see, overall, we have the S&P down almost 0.78%, Nasdaq 1.14%, Dow 1.03%, and VIX continues to climb. And this is again, as VIX climbs higher and higher, the more volatile the market becomes, and we continue to fall. As we look at the VIX historically, it looks like VIX kind of bounces this 2014 $20.14, and there's a chance that the VIX could come back to this 2021 dollar range again, because it is really bouncing quite high here. We're right now sitting at almost $24.69. It looks like we peaked here in October, 25 cents and $25.31. This is obviously the tariff situation, and right before the tariffs it was 27. So the VIX is continuing to go up. I mean, year to date the VIX is up 37%. 1 year is up 58%. So the VIX is quite high, showing some type of volatility in the market. The Nasdaq throughout the year, I mean, past 5 days, Nasdaq down 4%. Month, about 1.5%. 6 months, they're up 14. Year to date, they're 15.4%. So the Nasdaq is definitely holding up a good year to date performance. 1 year performance is almost 15% on the Nasdaq. The Russell, they don't have the Dow futures, Nasdaq, so they don't have the Russells here. Crypto, as you can see, crypto performance overall past 24 hours and funding rates. As you can see, Bitcoin past volume is up 23%. Price sitting at 93,000 a share. Price change of about 1%. Ethereum, almost you can think of Ethereum as a leverage of Bitcoin. It looks like in this case almost, so you got 3.3% about movement during the day. Price sitting at 3,100 here on Ethereum. And more money is flowing into there. Zcash had a really good year this year. I mean, if you look at Zcash and zoom out for the year, this is a crypto that is up over almost $1,300. It was sitting at $40 back in September, and now we're sitting at $627 a share. So crypto, like specifically this one, Zcash, has done like a privacy coin, has done pretty well. XRP once again holding pretty strong. This is one of the cryptos that, despite everything else getting beat up, I think XRP has held its ground pretty well. Year to date, 1 year performance, XRP is still up 99%, almost 100%. Year to date, they're down 4.5. 6 months, almost 9% in 6 months. So overall, for the year, they have gone up almost 100%. Technology today was down. Energy was up. Discretionaries down almost 2%. Staples up about 0.5% here, including communications. Industrials, financials, and utilities were all down. Not too crazy, but they were all down. Materials, real estate, and healthcare is also up. There's a lot here in healthcare. They really have not had too good of a year. About 7% in healthcare throughout the year, while other indices have moved pretty well. AI, I think we're seeing could play a significant role in healthcare growth. But there's still a lot of like AI plays that can really change the industry. Just like ABCL, a company that has been beat up quite significantly. He's been kind of all over the place and down quite a bit over the past month, about 34%. But year to date, this is a stock that is up about 21%, and then 1 year 38%, 1 month down almost 34%. 5 days they're still down, and obviously today they were up as well. But they barely made it. They eked it out here at around 11 o'clock. They were able to go into the green. So yeah, so the market overall is doing okay. They IPO'd in 2020, so this is a 5-year company. That is about the overview of the market. Tomorrow we have pretty decent earnings, big ones as well. AMD's got KULR reported today, but tomorrow, as you can see, we have a couple of important companies like Target, Lowe's, TJ Maxx, Wix, and then we have AMD, and Palo Alto also is reporting, but AMD is going to be the big number everybody's going to look at. Investors are going to expect that AMD is going to have to do something here, especially when it comes to forecast guidance. They're going to have to give really good guidance going forward, going into the year, and as well as really come out with really good numbers as well. So that is it for the day. I hope you enjoyed the series, going live almost every day now. We will see where this goes, but if you're here, make sure you subscribe to this channel, because this all I talk about is stocks. Once again, I discussed about a company called Copart. Amazing company. I will definitely do a review on this company, because they are turning mud into gold, junk into gold. So pretty impressive company here, Copart. Definitely check them out. They don't pay dividend. Still, I think they're about $300 billion company. Not too big, but market cap $40 billion company. EPS, I mean, they beat on estimates all the time. They take used cars and they resell them. They work with 80% of their business comes from insurance companies. They have an amazing platform that is used from US, South America, Asia, all the regions around the world. So pretty impressive here. This company beats estimates consistently. As you can see, they missed Q2 of 2024 and then Q4 of 2024, but overall, on average, the company is the type that continues to beat earnings and on revenue as well. That's all. Thank you so much for joining me. Have a great rest of your night. This is Financial Education. Peace.